Down after arguments with board members over strategy. The bank prepares its search for his successor. Welcome back to the programme, everybody. So just seconds to go until the start of the European equity trading session. We do have slightly lower expectations for London than elsewhere. I mentioned exposure to oil. I should also have mentioned exposure to gains in the pound. Of course, the pound is up by 0.4% against the US dollar this morning, 133.82. And we know well how that can take the wind out of the sails of the FTSE 100. So slightly moderating our expectations then in terms of what we'll see on the FTSE this morning. But other markets in Europe do look as if they'll pick up on some of the strength of the data that has been coming out of China, what that tells us about the ability of that part of the world, at least, to continue its rebound from coronavirus. So the FTSE 100 is the first to open, as is often the case, and it does make modest gains, actually, to the upside, despite that strength in the pound. Of course, we're constantly on Brexit watch, constantly waiting for the next lines to drop with regards to the Brexit story. We will continue to do that. The IBEX up by 0.4%, and as anticipated, the Paris market opens firmly to the upside, up by 0.4%, and actually there's not as much in it as maybe the futures had led us to believe. So FTSE up by 0.5%, the CAC 40 up by 0.4%. So generally a positive picture. That's on the back of, as I said, some strong data in the Asian session. We got factory activity data, in fact, coming through from China. That and optimism around vaccines. That's all bolstering, of course, expectations for the global economy. Joining us now is Alan Higgins, Coutts CIO. Alan, really good to speak to you. We see a day of positivity then in markets, better data out of China. This isn't new news, is it, the way that China is managing to rebound? But I suppose the more data points that we get from China that look positive, the more maybe it tells us something interesting about the domestic Chinese story and the regional growth story, maybe.
Yes, morning, Anna. Yes, really good data out of China. But as you say, not just China. We saw PMIs higher everywhere across Asia. And I do love that Chinese PMI data because, Anna, you and I will remember that a lot of suspicion about Chinese data, but you showed it earlier on Bloomberg. If you look at the graph of PMI, look at that V-shaped recovery, a huge V, but it goes to show the data was real because it collapsed to absolutely terrible levels, obviously, in Q1. So this rebound is real, and it is very positive for the global economy going into 2021.
This is real. The rebound is real in the Chinese data, then, you suggest. The rotation back into value and cyclicals, Alan, how real is that? How much is done? How much still to come?
Well, it was real in November, yeah, pretty dramatic after a very long period of underperformance of cyclical type stocks. For us, the rotation has legs. Why? Well, when you have a cyclical recovery, like we're seeing in China, like what we expect in, if you like, the G7, then that is the time to be in cyclically orientated stocks. 1, 2, the valuation, and 3, what I'm seeing from performance and flows is that very few active managers are overweight these areas. So there's a chance for these cyclical stocks to really work. And yes, they tend to be shorter term cash flows compared to long duration tech, but there's a price for everything, and these short-term cash flows can come back with a bang.
I just want to point out to viewers, we're still waiting for an opening price on UniCredit. We've been covering this story around UniCredit and the change of CEO there, the architect of the bank's turnaround plan over the last 4 years, now set to depart the business. We'll certainly bring you an opening share price on that, and maybe we'll talk about banks when we get that, Alan. Let me ask you, though, as we're talking about value and moving into value, what is the time frame around that trade? Because I'm reminded that we were talking about a time for value even before the pandemic, and then the pandemic meant that all of that got put on hold. Now we're back to talking about it again. So is this something you trade through the vaccine delivery phase, or is this something that has legs for many years?
Not likely legs for many years. You typically see a year or so of very sharp outperformance, and you're right. The pandemic, one of the side effects of the pandemic is to focus on longer duration cash flows, whether that be bonds or quality or technology orientated stocks. So no, it's a relatively short-term play, maybe only 3 to 6 months even, but it can be quite violent, as we saw in November. So it's something to position the portfolio for 6 months or so. But you know, we will still have an allocation to quality type equities, because this is what you want to own in the long run. So more reliable, consistent earnings delivery in the long run. But just for the next 6 months, 6 to 9 months, you could see real outperformance by so-called value or cyclical stocks.
So that's the value conversation, Alan. Another thing I wanted to talk to you about was a long euro call. And my colleague, Queen of Charts, has put together a chart, as you requested, on rate differentials between the Eurozone and the US. And you see this as broadly supportive of the euro. It has been. Will it continue to be so?
Yeah, so this is both euro dollar and the dollar in general. Look, it's a bit of a messy chart in the sense of where's the correlation here, and you're looking at 10 years. But the point being is that if you go back pre the pandemic, the spread between the Eurozone, whether it be short-term interest rates or long-term interest rates, was very extreme in one particular context, in the context of a very low-yielding world. So that spread was very large. So the Eurozone's always had the current account surplus, driven, of course, by Germany. So that's been a positive. And now that interest rate support for the US has gone away, both for the euro, for the Swiss franc, for sterling, et cetera, et cetera. So yes, I know it's potentially a bit of a consensus call. Makes me a little bit worried to be bearish on the dollar, but I think it's still right to be pro euro, pro sterling versus the dollar.
And talking of all things euro, and indeed talking of things value, that does take me into the bank's conversation. Still no opening price on UniCredit. Also waiting for an opening price on Bank Monte Paschi. And a lot of the fallout around UniCredit seemed to be about whether there would be a consolidation, a domestic consolidation story in Italian banking. The specifics, perhaps, if you prefer to leave those to one side, Alan, we can. But the consolidation story in banking, is that enough to get you interested in European banks? Because for a long time, you've been really interested in the US ones.
Yeah, so we're invested when it comes to equity, we're in the US, high return on equity, and also a deep value market. In the Eurozone, it takes a big leap of faith. Yes, they are extremely cheap, but the profitability has been weak. So our preferred way of playing that has been on the debt side, especially subordinated debt. Look, consolidation needs to happen, and UniCredit for a while, it was considered cross-border, especially with the CEO having come from Société Générale. I'm sure I haven't said that in proper French, but that hasn't seemed to have happened. And yeah, look, the French banks are minnows compared to the likes of JP Morgan and Citibank. So the European banks, rather, are minnows. So there does need to be consolidation, both at, as you say, intra-Italy, but I would argue in the whole of the Eurozone.
Alan, thanks very much. Stay with us. We keep waiting. We're watching for those Italian bank stocks to open up, for the investment community to assess the news around Mustier and what that means. Still to come here on the European Market Open, OPEC Plus delays its meeting after ministers failed to make progress on production cuts. As ExxonMobil faces an historic write-down of up to $20 billion, we talk energy next. This is Bloomberg.
desperately believe that we need more stimulus, and we need more stimulus today. I would beg Congress to go back to work and pass a stimulus bill this week. There's no time like the present. Dollars put back in consumers' pockets would be very, very important.
That was the former National Economic Council Director, Gary Cohn, emphasizing his view of the importance of a US fiscal stimulus deal passing this week. Quick check on the markets. We are 10 minutes into our trading session here in Europe, and this is the state of play. Actually much more positive than we'd anticipated. Perhaps futures certainly suggested there might be some weakness in London, but that has not come to pass. The FTSE 100 up by 0.8%. Some big names, the likes of Diageo, HSBC, AstraZeneca, moving to the upside. And we do see some strength in the pound this morning, going up above 134 for the first time in a few months. So that is of interest, of course. Just looking at the DAX and the CAC, we see strength in LVMH in Paris. That is helping the French market. BMPS, Monte de Paschi, just opening up, and up is the word, up by 8%. If the fallout at the top of UniCredit had been partly about the future of this business and consolidation in the Italian banking space, then clearly there is a read across. And there we get the opening price for UniCredit as well. That stock opening to the downside, down 7% this morning. That's on the news that the CEO is leaving, the architect of the turnaround plan. And perhaps this suggests that more M&A by UniCredit, more deals within Italy is more likely now. Perhaps that is exactly what that price action is telling us this morning. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. After more than 4 years leading Italy's biggest bank, UniCredit chief Jean-Pierre Mustier is stepping down. The sudden departure follows clashes with the board over strategy and the government's plan to sell its troubled bank, Monte de Paschi. He'll remain in position until April or a successor is found. Credit Suisse is proposing that its next chairman be the outgoing CEO of Lloyds Banking Group, Antonio Horta Osario. Shareholders will vote on the nomination in April. Horta Osario steered Lloyds to profitability and full private ownership after the financial crisis. Credit Suisse is trying to reverse a run of low profits. JP Morgan is planning to boost annual bonuses for its sales and trading workers. That's despite payouts declining across the wider company after generating a record $23.5 billion of revenue for the first 9 months of the year. Bloomberg sources say the bonuses will increase by up to 20%. That's your Bloomberg Business Flash. Anna.
Laura, thanks very much. Laura Wright here in London with your Business Flash. And now oil prices are falling again as OPEC Plus seeks more time to reach a deal on production policy after talks wound up without agreement. Ministers will now meet on Thursday of this week rather than today to allow more time to deliberate on whether to delay a planned increase in output from January. Let's talk about commodities and oil and perhaps some of the ESG agenda as well with Alan Higgins, Coutts CIO, who's still with us. Alan, I suppose one of the things they're grappling with at the OPEC Plus meetings is something you point out in your notes, that if the vaccine is successful in the medium term, then this 2021 could be a very strong year for oil. So how do you see the tussle over supply?
Yeah, so I can see it as a tussle because they must be eyeing 2021 and a better economic environment and stronger oil. That nearly always happens, provided the supply side is not ridiculously overdone. So, yeah, this will be a tricky one to figure out. But for us, if we're right about the global economy, we should expect higher oil prices next year.
We should expect higher oil prices. And I wonder how we then will look back at 2020 and see the big write-downs that many oil and gas companies have had to do around their assets. I'm looking at some headlines around Exxon just over the last 24 hours, facing an historic write-down, cutting the carrying value of their Western Hemisphere gas assets. And this was a substantial number. And we've seen that from other players within this space, haven't we? Could the weakness in these prices that we've seen in 2020, could that turn out to be short-lived then, Alan?
Well, I'm not so sure. I think there's a longer-term theme here, which is the move towards renewable energy, isn't there? So that is understandable, and even with most of the oil majors, you're seeing them move into renewable energy, and so the write-downs arguably a longer-term write-down, and so we're not calling for $150 oil or anything like that. It's a very low-quality forecast on oil, in any case. But if we're talking $50 to $60 oil, which is still a substantial percentage increase, but still, you can understand. I think the major oil companies are seeing the writing on the wall in terms of basically a less oil-intensive economy going forward in the major economies. Having said that, demand continues to hold up in China. One of the indicators I like to look at on Bloomberg is China oil demand. And just like the PMIs this morning, there was a very sharp V-shaped bounce in China oil demand, and that consistently moves upwards. So that will help demand from emerging markets, but the longer term trend is towards renewables.
Yes, indeed. And you talk about, in your notes, Alan, you mentioned that you have a big ESG mandate. I wonder what is the nature of that mandate and how quickly you're seeing that emerge.
So look, we've always run ethical portfolios at Coutts where clients typically excluded stocks, whether it be tobacco, oil, armaments. What we do now is more focused on engagement. So frankly, we may own the best-in-class oil major, but we will spend time with our partners engaging with them in terms of where are they on their journey to increase renewables, because what we want for all of us in 20, 30, 40 years' time is these oil majors to no longer, if you like, be oil companies, but to have maybe a small amount of oil production and to be diversified, renewable energy companies, which is what we're going to need.
Yeah, indeed. And let me ask you also about, the OPEC Plus grouping will be wrestling with all of the supply and demand dynamics that we've just been referencing, the short term, also the medium term, the more structural shift away from oil. They'll also be thinking about how much stimulus various governments around the world are going to put into markets and basing maybe assumptions on the US economy around that. And you've made the point around stimulus, or you at least raised questions around how much is really needed in the US economy. We just heard from Gary Cohn, Alan, a little earlier on, and he was saying he really thinks they need to get back in the room and hammer out a stimulus deal next week. Why do you have a different view?
Well, look, of course, stimulus would be helpful, and if they can do a stimulus package sometime in Q1 next year, that would be fantastic. But if you take the view that the vaccine is a game changer, we do. It's very hard to change human behavior. We saw that in the V-shaped recovery in consumption across the US, the Eurozone, and the UK, for example. Therefore, we should have a strong enough economy to get through this anyway next year. So, look, it would be nice to have, but I guess what we're saying is not necessary. We see real strong global economic growth next year anyway.
And where do you see the US heading? Where do you see the risk of insolvency for corporates in the US, Alan? Thinking about a call around high yield, for example, what are your hopes and fears around that in 2021?
Okay, so we're already seeing defaults fall in the US, and the credit markets are financial conditions in general are very, very easy. The credit markets are open for almost anyone. We've seen that whether you be in the cruise industry or whether you be in shale. So, you could say default seems to be the hardest word, because we're not having the default cycle that you might have expected given the very, very sharp recession. Partly because of the stimulus, of course, but partly because as a result of the Fed buying corporate bonds and even fallen angels, it's made the credit markets very, very open for all kinds of issuers. And of course, if the credit markets are open, then default can be put off. There's not that hard closure of markets. So, generally positive. But to be honest, Anna, a lot of that is in the price. If you look at the valuation of high yield, the high yield market knows this already.
Right, the high yield market knows this. I mean, from what you've said then, maybe this doesn't hurt the banking sector, Alan. If this is all thanks to the Fed, maybe this doesn't hurt banks. There have been concerns, maybe that's a European story, that perhaps indebtedness of corporates will eventually stick to banking. How do you see that link?
Yeah, I guess, Anna, what you're saying is that these huge provisions that we've seen, especially in the US, can be released. And I have a lot of sympathy for that. And I think that the pricing of some US bank stocks is starting to realize that should we see a recovery, do we really need all these provisions, and they could they be released back in terms of profit? So yeah, I can see that. Now look, there is a default cycle. We have had a huge recession, and there will be huge pain, especially in the service sector. But it will tend to be smaller companies rather than large companies that have access to, especially the corporate bond market.
Alan, just one final question. We've heard quite a lot from regulators in the UK about the need to allow capital to flow where it's needed, to get involved in, for example, infrastructure investment. I don't know if you run any money that is able to invest in infrastructure, and whether you have any thoughts on why you don't have much exposure in that place, and what would enable you to have more.
We have had some exposure in infrastructure. It can be hard to scale in a liquid way, in the sense of if you want to invest, we don't. Not all our portfolios are liquid, but our mainstream portfolios are liquid. And what does that mean? It tends to mean you're buying infrastructure stocks rather than, if you like, owning the piece of infrastructure that is happening, whether it be the London sewer project, which is inside some of the UK listed investment trusts, for example, and they can be attractive. They do have lower volatility than general market stocks, but it's just not an area that we focused on recently. We've certainly been there before, and the low interest rate regime is a help, but it's just not a sector that we're focusing on right now.
Okay, Alan, really good to speak to you this morning. Thanks for spending time with us. Alan Higgins, Coutts CIO. Alan will actually be continuing his conversation with Caroline Hepker and I on Bloomberg Radio. That's at 9 a.m. UK time. 21 minutes into Europe's trading session, and let's have a look at what's going on in the Italian banking space right now. We've heard overnight, of course, about the departure of UniCredit's CEO. A lot of the fallout there seemed to be around M&A strategy, around the extent to which UniCredit was going to get involved in M&A within Italy, and that seems to have resulted in the CEO stepping away. So UniCredit now down by 7%. Monte dei Paschi, which has been talked about as perhaps a target of UniCredit, maybe the Italian government would like it to be seen that way. That stock up by 5.7%. For more on this, let's bring in Bloomberg surveillance anchor Francine Lacroix, who's interviewed Mustier many times and very much across this story for us. Francine, good morning. So how abrupt is Mustier's departure?
Well, it was pretty abrupt, Anna, but I think we had, a couple of leaks on Sunday night when this board meeting was actually called, that there was concern that he just wasn't doing what the Italian government wanted him. So, and if you go back exactly to see what he's done and what he hasn't done, there's a lot of benefits that Mr. Mustier has been doing. He's considered one of the smartest bankers of his generation. You can see testament to that is the share price falling after he said he wouldn't renew his contract after April. But there was this emergency summit by the board on Sunday, and there were rumors floating that they were looking for a possible replacement for Mr. Mustier. So I think it's come quite quickly, but we had heard rumors about disagreement between him and the board, about him and some of the strategy that the board wanted to put in place over the last couple of weeks. And then it all came to a head on Sunday night when they all met to discuss his future and the future of UniCredit.
Yeah, I wonder who is being looked at as a possible contender to replace Mustier then, Francine. And the market's message today seems to be an increased expectation of domestic consolidation. That seems to be something that perhaps they'll have to think about at the start of their tenure, whoever the replacement is.
Yeah, and we know that disagreement was over, for example, M&A in Italy. You rightly said, Anna, that, Intesa, which is the bigger rival of UniCredit, bought an Italian bank, and the Italian government has been shopping around, as it were, Monte Paschi for many years. Now, if you look at the contenders, there's about 3 or 4 names on the list. None of them have been confirmed. I know our reporters on the ground have been trying to call the various companies to check whether their chief executives would be interested. They're all Italian names. We have the CFO of Nexi, you have the CEO of Finmeccanica. They're Italian names, and one of the things that is also one of the narratives in the market is, of course, it's very difficult to have such a large bank owned by, or put in charge by a foreigner, which added to the complexity that Mr. Mustier was facing. But if you look at what he's done for shareholders, the share price is actually lagging in Intesa, but he's done really well in terms of trying to give back to shareholders, and he's always put his shareholders above anything else, which is maybe why we're seeing a bit of share price dipping today on the back of the news, Anna.
Francine, thank you very much. Francine Lacroix with the latest on the Italian banking sector, change at the top and reaction in markets. Let's talk about another company in focus. Tesla is added to the S&P 500 later this month, or when it is, it will happen all at once, we now know. S&P Dow Jones indices announced the decision late yesterday. It had previously considered adding Tesla in two parts, given its huge size. Joining us now to discuss Bloomberg's Danny Berger. Danny, what's behind S&P's decision then to add the shares all in one go?
Listen, Anna, S&P wouldn't have done this unless they were extremely confident that the market and market players could handle this. And before making the decision, they did have this period where they surveyed different investors to see what they thought. So this likely reflects a lot of optimism from them that they can handle this massive addition. And again, this is going to be the record in terms of biggest company getting added to the index. S&P Dow Jones, when they released their statement, they said that there was enough liquidity for this to be handled without any ease and with ease rather. And as one strategist told Bloomberg, it's like ripping off the Band-Aid. Putting it all in one go is the norm. Breaking it up into two would have been unprecedented, perhaps risky for a company that's unprecedented like Tesla in terms of size.
And just briefly then, Danny, very briefly, what kind of market impact will this have?
And we're expecting $72 billion worth of shares to exchange hands when this rebalances. To give you a framework, the average is less than half of that, and the prior record was 50 billion, Anna. So this is definitely going to create a very high volume day of trading when it occurs.
Okay, something to look ahead to before the holiday season. Danny, thank you very much. Danny Berger with the latest on Tesla. Back to the banking subjects shortly. UniCredit CEO steps down then. Credit Suisse proposes Lloyd's Horta Osario as its new chairman, and JP Morgan traders are set for a boost to their bonuses. Coming up, a roundup of all the banking news this morning. This is Bloomberg. Welcome back to the European Market Open. 30 minutes into Tuesday's trading session, and we've managed to get some decent gains here on European equity markets. Futures had pointed to the upside. The FTSE 100 outperforming our earlier expectations, perhaps, given futures suggested some weakness, but up by more than 1%. We see the banking sector moving to the upside, and that's not entirely the Italian story. That's other banks as well. Basic resources also moving higher. That plays well in London, of course. Autos and parts move to the upside. That plays well over in Germany, and the DAX is up by 0.7%. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. President-elect Joe Biden has chosen Janet Yellen as his Treasury Secretary. The former Fed chair was widely expected to get the top economic job, and if confirmed, she will be the first woman in the role. Yellen tweeted, "The country faces great challenges, but must restore the American dream." China's economic offensive against Australia could end up backfiring. Amid an ongoing spat, Beijing has ramped up tariffs against a variety of Australian products. It's a warning to countries not to criticize Beijing. But China's moves are adding to concerns about economic coercion and may end up pushing some nations closer to the US. Bitcoin has hit a record, beating its previous high set in December 2017. It takes this year's surge to more than 170%. Even with the recent rally, Bitcoin ownership remains concentrated with a small number of investors. According to Flipside Crypto, about 2% of accounts control 95% of the digital asset. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you very much. Laura Wright here in London. So, as we've been covering this morning, UniCredit shares falling this morning as the CEO, Jean-Pierre Moustier, says he's stepping down after 4 years. The announcement comes amid clashes with the board over strategy. In other banking news, Credit Suisse is proposing that its new chairman will be the outgoing CEO of Lloyds Banking Group, that is Antonio Horto Osorio. Shareholders will vote on the nomination in April. Let's stick with the banking theme, and joining us now, Bloomberg's Tom Metcalf, Credit Suisse, who's going to run us through some of these stories. And let's start with the Horto Osorio news then, Tom. Credit Suisse has had a turbulent past year. What will Horto Osorio, what is he coming into? I'm just looking at the share price reaction this morning. We don't see an enormous amount of it in Credit Suisse, plenty of it elsewhere in the banking sector. But what's he going to be arriving into?
Yeah, I think turbulent is probably the right way to put it. So, I mean, Credit Suisse is just one of those banks that always seems to be making the headlines, for good and bad reasons. So this year, their trading arm, for example, has disappointed, while other banks have really, sped ahead during the pandemic. There's been quite a few sort of big loan losses, whether from its wealth management arm in Asia. And then you have sort of stuff like Credit Suisse with the bank, which was involved in Spygate, following a departing executive before he headed to a crosstown rival, UBS. So it's sort of a perpetual turmoil there at the moment. And what's interesting is he'll be replacing a chairman who is very Swiss. And at the same time, they've just had a new CEO come in as well. So it's a very new leadership team as well. And obviously, CEO of Lloyds, a very UK-focused bank, very much a bank focused on retail, and he's going to Credit Suisse, which is a huge investment bank, obviously a massive wealth management arm, and a home market that is very different to the UK.
And Tom, just looking at what kind of reactions were, as I say, we're not seeing much movement in the Credit Suisse share price today, but we are seeing a lot of movement elsewhere. The Italian story we've covered quite a lot, but actually UK banks doing really well this morning. HSBC up by more than 3%, Lloyds up by more than 4%. And given the weighting of banks in London, that means the FTSE 100 is also doing well. It's outperforming the rest. It's up by 1.25%. Looking at the pound, we are stronger on the pound, and that can have some impact in London. But what's happening? The broader story around UK banks, around the banking sector more generally, it does seem to be catching a bid on the first day of December.
Yeah, and it's interesting because it's not entirely clear what's driving that, but the big story, certainly in UK banking right now, is one, dividends. The prospect of payments being allowed to restart, and there has been chatter recently that the Bank of England is effectively minded to allow that under a various nuanced scheme. And probably the other thing as well is the vaccine story. So just more and more positive news about that. And if kind of the economy gets back to normal, then that will be great news for the banks, both from continuing business point of view, but also all these loan losses they've been expecting, perhaps they'll be smaller than they provided for.
Yeah, Barclays up by 3.5%, and it's not an entirely UK story, as I mentioned. BNP also strong. Banco Santander is also strong. So there's certainly something, and maybe the rotation story into value, also part of the narrative we've been talking about for some weeks, Tom. Let me ask you about bonuses, because I know the JP Morgan story has been getting quite a lot of attention on the terminal. A decent story then around bonuses. Was that to be expected?
So it's interesting. I mean, I think if you look at how well the trading arms have done, you would think, yes, that, traders can probably expect a pretty decent bonus spot. So what JP Morgan's saying is, hey, we'll give a 20% kind of effectively rise on last year to traders' bonuses. But at the same time, from Bank of America, a big rival of JP Morgan, the messaging coming out of that is they're going to keep their bonus pool flat. And obviously, driving that might be concerns about how strong will the, economic recovery be, how sustainable is sort of the trading boom we've seen this year. So that came out before the JP Morgan news, and that sort of stymied that optimism. But JP Morgan certainly seemed to be putting a stake in the ground. But of course, we can also, some of these traders who've seen JP Morgan, I think their revenues rose something like 48% this year. Even for them, they may be going, hey, where's our missing 28%? So hard to please bankers when it comes to bonuses.
Tom, hence why the stories are so well read. Tom, thanks very much. Bloomberg's Tom Metcalf with the latest news flow surrounding the banking sector. A lot going on this morning, and plenty of price action as well. Up next on the programme, the mission of the century. Airlines build plans to distribute billions of coronavirus vaccine doses across the globe as the clock ticks on approval for the producers. We'll hear from our interview with the CEO of Moderna next. This is Bloomberg.
I think a real important announcement was the final enrollment of 15,000 plus people in the UK and 2,400 people in South Africa. I think those are really great executions of clinical trials, and now we wait and collect data to see what the efficacy levels from those two trials are. So it's a really important milestone that we achieved.
That was the Novavax CEO Stan Erck speaking to Bloomberg after the company's UK vaccine study reached full enrolment. Let's stick with the subject of vaccines and hear from one of that trial's rivals. Moderna is requesting clearance for its coronavirus vaccine in the United States after a new analysis showed the shot is highly effective in preventing COVID-19 with no serious safety problems. We asked the CEO, Stéphane Bancel, about the results and how the company plans to distribute the vaccine.
2 weeks ago, we had the interim analysis of a phase 3. Today, we are announcing the final analysis, 94% efficacy. But the piece that's almost most important for me is the severe cases. We had 30 severe cases, all were on placebo. 0 were with people who got our vaccine. And when you think about what has happened in terms of severe cases leading to hospitalization, leading to ICU, leading to death, this is really, I think, a big moment in the fight against this pandemic. So I think that our goal is to get the vaccine approved in the coming weeks. We're filing today to the FDA, but also in Europe, in the UK, Canada, and many other countries, hoping to get approval in the next few weeks. In the US, for example, the FDA has informed us that they are likely to have on December 17 the advisory committee to the FDA, and then I will expect within 24 to 72 hours after that committee an approval. We are working very closely in the US with Operation Warp Speed, General Perna, who is working to make sure that within 24 hours after approval, products will be out the door and that vaccination can start so we can help protect as many Americans as we can. We have said that we are still on track to deliver up to 20 million doses in the US before the end of the year.
Stéphane, how do you imagine it actually working? What does it look like when this starts to get rolled out, when people start to come forward and say they want the vaccine or are being offered the vaccine?
So I think it's going to be like a typical kind of flu vaccination, just at a scale that has never happened in the world in terms of the number of people to be vaccinated at the same time. But basically, I mean, it's like a regular shot. You go, into a private room, you show your arm to a nurse or a doc. They put a little, piece of anti-infectant to clean your arm. They inject the product. They put a Band-Aid, and then next one, you need to get your boost 30 days after. So there's a lot of system being developed by the government to be able to track which vaccine you got in your prime injection so that you get the same vaccination by the same manufacturer for your boost. But that's how it's going to look like. And so if you go back to the data, if you get our vaccine, what do we know now? You have 94% chance of having no disease if you get infected. If you get our vaccine and you get infected, 94% chance to get no disease. And in the small percent chance that you have to get disease, it will be mild disease. Because as we said, we got 0 severe disease. And this is why I think vaccination is going to be so important to stop this pandemic so that we can save lives and go back to normal.
Can you help us break down the data older than 65? Any sort of effects? What have you noticed in your testing?
So we have not yet disclosed. We will do that when the FDA meeting meets. The data is just primary top line because we literally got it yesterday. The team is QCing everything. If you look at it, around a third of the study was the elderly, above 65-year-old, 30% of 30,000 people. And so what we've said is, like in the previous interim analysis, the elderly data is very similar to other age group. People with diabetes or other comorbidity factor are also very high efficacy. So by the time we meet with the FDA on December 17 for the advisory board, we will have all the details, and most probably those will be put online by the FDA in a briefing book a few days before the advisory board, as it's usually done by the FDA.
Stéphane, is there anybody that shouldn't get the vaccine?
So today, the study has only been done for people above the age of 18. So we are going to start very soon this year a study in teenagers. So the teenagers should not get vaccinated because there is no safety data or efficacy data available yet.
That was the Moderna CEO, Stefan Bancel, speaking to Bloomberg's Alex Steele and Guy Johnson. Really interesting conversation there. 2020's forgotten industry perhaps has a key role to play then in rolling out the coronavirus vaccine this year and next. So linking back to the vaccine conversation, how will it be distributed? Airlines from Asia to Europe have been working on plans to rapidly deliver shots across the world, all while keeping them stored safely at sub-zero temperatures. IATA CEO Alexandre de Juniac said it would be the largest and most complex logistical exercise ever. Joining us now to discuss the complexity involved here, Chris Jasper, our European aviation editor, who's written extensively on this subject. Chris, really good to speak to you. So is there enough, looking at the big picture here, is there enough freight capacity or capacity in aviation to carry this vaccine?
Well, IATA calculates that some 8,000 Boeing 747 freighters, that's dedicated freighters, each carrying 110 tons, would be needed to fulfill the airlift over the next 18 months to 2 years. That's a lot of aircraft capacity. And the problem is, at the moment, firstly, there are only 2,000 freighters to start with, and most of those aren't 747 sized, which means that most of the load will need to be carried by passenger planes as belly freight, and the bulk of those passenger planes are currently not operating. They've been grounded by the virus. So the big push now is to get as much airline capacity back flying, not just the freighters, but the passenger planes, in order to carry the vaccine.
Yes, the government might have some interest in that happening then, if it's going to, or governments around the world might have some interest in getting those passenger planes in the air, if that's the case. How big a problem are the temperature requirements going to be here, Chris? Because it's all very well to have the space in an aircraft, but it has to be at the right temperature controlled, in the right temperature controlled conditions.
Yeah, it's a complicated matter because, as we know, the different vaccines are to be carried at different temperatures. With the Pfizer vaccine, the reality is minus 70 degrees Celsius is so low that it's not a temperature that can be attained in the hold of any plane, whether a freighter or otherwise. It needs to be within the container that the vaccine is carried in. So there are various kinds. Many use dry ice to get down to that sort of super cool temperature. Others use insulation. Others are plugged into the plane's electrics. But most planes, we're hearing, would be able to carry these containers. The bigger problem is perhaps on the ground, airport facilities and so on. There's a network of specialist pharma hangars at various cargo hubs, around 20 around the world, that can certainly deal with the Pfizer vaccine. There'll be more that can handle the Astra one, which is, of course, requires a refrigerated rather than a frozen temperature. And then beyond that, there's the huge challenge of getting the vaccine beyond the airport and out into the community.
Yeah, indeed, and the last mile, obviously, it could be a challenge. We certainly heard that from the boss of Deutsche Post, I think, was suggesting that that's where the difficulty would be. Talking of challenges and difficulties, how difficult is it going to be to reach the more remote parts of the world, and how long might it take? You cited some research by IATA that talked about a year and a half to 2 years.
Yeah, I think that's where the biggest challenge lies for the airlines. UNICEF is heading an effort to reach 92 of the world's poorest countries because of their huge experience in distributing vaccines day to day. So those countries have signed up to have UNICEF both buy the vaccine and distribute it for them. Another 70 will pay for the vaccine, but UNICEF will also manage that process. So the airlines are now speaking with UNICEF and trying to work out exactly what they can do, where their routes will fit, and so on. And that's likely to be the focus for getting the vaccine into South America and Africa and parts of Southern Asia. But even then, as you say, the airlines can get it out there, can get it probably to a sort of a safe hub on the ground, but then the process of moving it forward from that point is where the real difficulties might lie.
Yeah, really incredible to think about the difficulties that this sector has faced due to the coronavirus and the role it might play in bringing all of that to an end. Chris, thank you so much. Thanks for bringing us the story. European aviation editor Chris Jasper. Back to other matters, and let's check in on the markets for you and what's going on specifically with the Italian banking sector. We still have this picture for you: weakness in the UniCredit share price. This after the CEO, Jean-Pierre Moustier, steps away from the business. A fallout with the board over M&A strategy seems to be part of the story, and that is also the reason we see BNPS moving to the upside, up by 4% for Banca Monte Paschi, as there is building momentum, building suggestion, I suppose, in the markets that some deals within the Italian banking sector could now be more likely. Coming up here on the program, has the time finally come for cryptocurrencies? Bitcoin celebrates another record, and enthusiasts say this time it's different. We'll discuss with Market Live's Christine Aquino next. This is Bloomberg.
I would say that not just Citi, but I think the banking industry had a good relationship with her. And, if she is elected into, or if she is voted into the seat, I think she'll do a great job. And I would expect that relationship to continue. And I'd also, shout out another glass ceiling broken in terms of her then becoming the first female Secretary of Treasury, which would be another great one for the books.
That was the Citi CEO, Michael Corbat. You can catch David Rubenstein's full interview this Friday at 3 p.m. UK time on Bloomberg Invest Talks. Let's get to our Markets Live conversation right now. Christine Aquino joins us from the Markets Live team. Let's get into the conversation then, Christine, about what's going on these markets. For starters, shall we? I was looking at the banking sector, up by 2.5% as a whole, which is quite good performance for December the 1st. I wonder if investors woke up 1st of December and said, right, let's start to take the value trade really seriously. What do we think is happening now?
Yeah, Yeah, exactly, Anna. I think there is definitely an element of the value revival here. I mean, certainly that trade did really well in November, barring the price action yesterday. And we've seen these battered sectors all year finally catching some attention once investors have kind of cleared some uncertainty out of the way. In November, of course, we got a more definitive answer to the U.S. political situation for one. We also got lots of vaccine development. And I think the combination of these things really gave investors the go-ahead signal to basically look at all these unloved sectors that they've been ignoring for most of 2020 and really take a good look at these. And certainly the banking sector is one of these sectors that's finally getting investor attention and perhaps see a bit of a comeback in the last month of this year.
Yeah, I mean, December started off in stunning fashion in that regard. Let me ask you about something else that's had, well, it's had a volatile few weeks, but it's performed very strongly just of late, and that is Bitcoin, up at record levels. Now, some people on Wall Street saying Bitcoin has shot to a record just as billions of institutional dollars have fled gold, and linking the dots between the two. Are you linking the two together, Christine?
Yeah, well, we're absolutely investigating the why there is a link between the two in terms of the public debate over it on Markets Live. I mean, we've certainly ruminated over the merits of Bitcoin as an asset class on its own and not necessarily an alternative to gold. Some of my colleagues on Markets Live will certainly dispute that claim. But I think, yeah, it's very interesting. Again, this tends to happen, you know, when Bitcoin does hit levels such as this that we're seeing now in such a speedy fashion. And I think this is, you know, one of the merits of Bitcoin that we've observed on Markets Live is its longevity, and that it's managed to get through various cycles of booms and busts now, even in the last just 5 years or so. And it's still around. It's still part of the market's conversation. And that shows you how much it has evolved as an asset class, whether or not you believe in the longevity of the gains itself. It is hard to dispute the longevity of Bitcoin as an asset, and it's here to stay probably in the next decade or so.
Christine, thank you very much. Christine Aquino joining us there from the Markets Live team. Let me just get to some breaking news. We've had German unemployment data just hitting the Bloomberg. So unemployment falling by 39,000 in November. The estimate was for that number to go up by 8,000. So that does look to be better than had been anticipated. The German labour market shrugging off, my colleagues write, a worsening pandemic and new restrictions with this better picture for unemployment unexpectedly declining for a 5th month in November. This is Bloomberg.
OPEC breakdown. The group delays output talks until Thursday after ministers failed to reach a deal. C-suite clash. UniCredit Chief Executive Jean-Pierre Mustier is stepping down after arguments with board members over strategy. The bank prepares its search for its successor while shares sink. And Credit Suisse's new chairman, the Swiss bank, taps outgoing Lloyds Group Chief Executive Antonio Horta Osorio as its next chairman, looking outside the Swiss establishment. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. It is December, so happy December. It's crazy, actually, that we're already in December. I see quite a lot of jokes out there saying it's December, but of what year? Certainly, the markets have had a pretty good month of November, so we'll see exactly what the next couple of weeks bring. We're also getting some data. Euro area November manufacturing coming in at 53.8. The preliminary figure was 53.6, so it's pretty much stable, just a tiny touch up. Now, the focus is firmly on what the markets are doing. There's a bit of a stock bounce back. If you look at U.S. futures, they're also up. Dollars slipping. I'm looking at Bitcoin trading near a record, so I wanted to make sure that we were hitting that as well. Gold edging up, Bitcoin trading near a record, and then oil falling for a third day as OPEC Plus sought more time to reach a deal on this production policy after a meeting broke down without an agreement. Let's also focus on the European banks. There are two main stories out there. It's like buses. You wait for them for ages, these stories, and then they come all at once. Credit Suisse proposing Lloyds Horta Osorio as the next chairman. So we look at what that company is doing. You can see Credit Suisse pretty much unchanged. But UniCredit, with Mr. Mustier saying he won't seek a second term, is down quite a lot, down some 5.7%. And yesterday, it was already down 5% on rumors that he would step down. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. President-elect Joe Biden has chosen Janet Yellen as his Treasury Secretary. The former Fed chair was widely expected to get the top economic job, and if confirmed, she will be the first woman in the role. Yellen tweeted, "The country faces great challenges but must restore the American dream." Now, OPEC is delaying talks for 2 days to give ministers more time to reach a deal. That's after a long and tense meeting on oil production broke down without an agreement. The nations are discussing whether to increase production in January as planned or maintain the cuts to help a rally in oil prices. And China's economic offensive against Australia could end up backfiring amid an ongoing spat. Beijing has ramped up tariffs against a variety of Australian products. It is a warning to countries not to criticize Beijing, but China's moves are adding to concerns about economic coercion and may end up pushing some nations closer to the US. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, the prospects of a coronavirus vaccine helped global stocks rise over 12% in November, the biggest monthly gain on record. Moderna shares surged 20% yesterday after the company moved ahead with plans to request emergency approval for its vaccine in the US and Europe.
So I think it's going to be like a typical kind of flu vaccination, just at a scale that has never happened in the world in terms of a number of people to be vaccinated at the same time. But basically, I mean, it's like a regular shot.
Well, the Fed Chair Jay Powell welcomed the vaccine news, but also warns that the U.S. economy remains in a damaged and uncertain state. Well, joining us now is Kamaksha Trivedi, co-head of Global Foreign Exchange, Interest Rates and Emerging Market Strategy Research at Goldman Sachs International. Thank you so much, Kamaksha, for joining us this morning. I think Goldman Sachs is amongst the most positive on what kind of effect a vaccine actually does for the world economy. Are we finally going to see inflation when 50% of the population are vaccinated?
Morning, Francine. So I think, yes, we are very positive on a vaccine-led recovery in the global economy. I think that despite the rally in markets that we've already had, you mentioned it, it's been a November to remember for global markets. Your global, lots of economies in the world are still, substantially below the levels that they were at pre-pandemic, with the exception of China. So we do expect a very strong bounce back in the global recovery. And along with that, you will see some some price pressures come in, especially I think around the turn of the first quarter going into the second quarter, because you also have some very strong base effects at that point and some commodity price increases that we expect. But on the whole, volatility, and some upward pressure, yes, we don't really expect to see the kind of output gap tightness driven core inflation that would really worry central banks in a big way to come through in 2021. 2021 might just be too early for that. I think one sort of wrinkle to that argument, however, is we still have to see what happens in the Senate runoff elections in Georgia in the early part of January. If on the off chance the Democrats manage to win both of those, it's not what the prediction markets are expecting, and they do control the Senate, then the chances of a much bigger fiscal stimulus than what the market and what we are factoring in, I think, comes back onto the table. And then you can start to see potentially the contours of a more longer lasting increase in inflation out there as well. But for now, I think volatility, yes, some inflation scares through the year, but we're not expecting really the kind of inflation that would worry and prompt central banks into tightening actions.
So, Kamarsha, let's say that there is not this huge stimulus package from the U.S. that could actually spur, the whites of the eyes of inflation. But how deep can the recovery be, and how broad would this recovery be? Just on, the current stimulus we have now, maybe a bit of extra stimulus in the U.S., central bank policy staying as it is, but the vaccine coming in place into beginning 2021.
I think the vaccine and its efficacy, a safe and effective vaccine, is several times, I think, more important at the current juncture than the stimulus itself. I think that, large parts of the economy, even in parts of the world where you have already seen recovery, and manufacturing, construction are some of those sectors where you have seen it, you still have substantial spare capacity output gaps in sectors that require a lot of face-to-face interaction. And I think that that's the kind of area where you could see a very rapid bounce back if a safe and effective vaccine starts to be rolled out, people get confidence, and these even smaller scale lockdowns can be wound down. So I'd say we are very confident that you can see a pretty deep and a pretty broad recovery rippling out across the world as the vaccine gets rolled out, and rippling out across the sectors that have been left behind on account of the coronavirus, especially things like transportation, leisure, a lot of the service sectors that require face-to-face interaction. So I'd be pretty bullish on that outcome from a vaccine standpoint.
What does it mean for dollar?
Look, I think it's a fairly typical recipe for a dollar downtrend to extend. I mean, the dollar started out this episode, pretty overvalued. It got to about 20% overvalued at the peak of the coronavirus drawdown in March, April. It's now about 10% overvalued on our metrics. The Fed has cut rates, quite substantially. If you take our forecast, literally, we expect 5-year real rates in the U.S. to head down to something closer to -2%. So still sort of, further downside there as inflation picks up, but the Fed doesn't validate that. But most importantly, we expect this deep and broad global recovery that I was just speaking about. And typically, when you see that type of global growth pick up, you tend to see, a lot of the flows that have gone into safe haven assets, and the dollar is at some level of safe haven, tend to reverse and go back into riskier places, like the more commodity-driven currencies, emerging markets more broadly. And so, we do expect on the back of all of that, the dollar to weaken by about, roughly 5 to 6% on a broad trade-weighted basis in the coming year.
Kamarsha, thank you so much. Kamarsha Trivedi there from Goldman Sachs International stays with us, and we'll talk about a lot more commodities. We'll talk about oil and, of course, the emerging markets. Coming up, growing concern, oil falls as OPEC Plus seeks more time to reach a deal on production policy. We'll discuss that next. This is Bloomberg.
it is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
I would say that not just Citi, but I think the banking industry had a good relationship with her. And, if she is elected or she is voted into the seat, I think she'll do a great job. And I would expect that relationship to continue. And I'd also, shout out another glass ceiling broken in terms of her then becoming the first female Secretary of Treasury, which would be another great one for the books.
Well, that was the Citi Chief Executive, Michael Corbett, and we'll bring you more of that interview throughout the day. Now, let's dig a little bit deeper into the oil market. OPEC Plus is seeking more time to reach a deal on production policy after talks wound up without agreement. Ministers will now meet on Thursday rather than Tuesday to allow more time to deliberate on whether to delay a planned increase in output from January. Well, still with us, Kamaksha Trivedi from Goldman Sachs International. Kamaksha, we were talking about this broad recovery, and you mentioned some of the commodity prices. I know more and more, I think copper is a good barometer of what's going well. Is oil still a good barometer, or is it different because of the climate change and renewable energy, talk around it?
Yeah, I think that's a fair point that there are some structural reasons why, energy has been a bit of a lagging asset class. But I think, if you look at the coming few months and certainly for the coming year, I think you will see oil also participate if global demand recovers in the way that we are expecting. I think that it's probably fair to say that, the recovery in China and parts of Asia has been sort of further ahead than Europe and North America. And copper is typically much more levered to demand coming out of China. So I think that the very sharp rise there reflects the kind of significant recovery in China, which is probably the only place which has gone back up to pre-pandemic levels of activity, and we still expect another pretty strong year there. I think as the year progresses, however, and as demand picks up, particularly transportation demand, which has been one of the hardest hit, we would expect oil prices to move higher as well. The OPEC, talks that are going on are obviously a kind of important near-term issue to, hurdle to get past, as is in some sense the resurgence of COVID cases in Europe and North America. That's kind of near-term issue to deal with. But if we are right about a vaccine-led recovery, I think that especially as you get to the sort of, second half of 2021, oil prices will participate in that move higher as well.
So I think you're expecting emerging markets broadly to outperform some of the other markets, Kamaksha. Is there anything that looks particularly attractive right now?
So look, when we think about our global outlook, we expect, China, as I just mentioned, to be one of the sort of strongest forces in the race. We expect commodity prices to do well. It's a good environment for cyclical assets and value as well. And if you ask yourself, which asset class, combines, or embeds all of those, cyclicality, value, China, commodities, emerging markets really stand out. And especially they stand out from a point where positioning has been pretty light. It's gone up in the last couple of weeks, but over the last couple of years, it's been a pretty under-owned asset class. And the attitude of the U.S. administration towards global trade might be shifting in a more friendly direction as well. So I think that you really want to own those sort of, deep cyclical assets. Those are where the real opportunity outperformance is. That includes EMFX, high-yielding EMFX. We like the South African rand, the Mexican peso, the Indian rupee, high-yielding EM credit, which has underperformed so far in this rally, both relative to DM credit, but also more broadly relative to spread assets. And then cyclical stocks in general, industrials, emerging market banks, for example, have been a big lagging sector. So we really like these sort of cyclical exposures in emerging markets. We think there's a real opportunity here for once that if these four forces, cyclicality, value, China, and commodities come together, that you could see pretty significant outperformance across the asset class.
Kamaksha, is there anything in the emerging market space that is either idiosyncratic, I don't know whether it's Turkey or something else, that actually makes you worry that you really don't want to play in 2021?
Look, I think the emerging markets always have idiosyncratic left tail issues. I think Turkey, you mentioned, is very much, in that group. You've seen some more orthodox steps recently. So perhaps there's, some stability there after a long period of underperformance. Argentina, the parallel market spreads are at their wides. We expect perhaps some, currency adjustment in Nigeria. So I think there are always some of these places that you have to be concerned about the level of sort of debt distress, especially if there's a sort of renewed growth collapse. Some parts of sub-Saharan Africa could be vulnerable to that as well. So that's always there. That is there in 2021 as well. One has to be careful about those situations. But what I would flag is that there is also a kind of right tail possibility apart from the left tail possibility that there have always been in emerging markets. And I think people shouldn't forget that when thinking about their targets and the extent of the outperformance that can occur, especially after the strong run that we've just had.
Is there anything to do with gold at the moment? Is it a protection against anything? Is it something that you look at, or it just seems overbought?
No, look, I think there is a case for gold. I think that case, was one of kind of safe haven and protection, as you mentioned, and perhaps as we are seeing this rally in risky assets, that case has eroded someone's taking the shine of gold, if I may use the phrase. But there is also a case for gold that comes from the demand side, which is largely sort of emerging market demand, and that source of demand for gold has been extremely subdued. So once again, if we see this sort of broadening and deepening of the recovery with emerging markets, typically the recovery there being somewhat backloaded depending on when they get the vaccine rollouts, which is likely to be somewhere down the line. I think some of that demand may re-emerge, further out.
Kamaksha, thank you so much for joining us today. Kamaksha Trivedi, there, co-head of Global Foreign Exchange, Interest Rates and Emerging Market Strategy Research at Goldman Sachs International. Up next, UniCredit's chief executive steps down. Credit Suisse also proposes Lloyd's Horta Osorio as its new chairman. Coming up, a roundup of the banking stories of the day. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacroix here in London. Now, changes at the top in banking. UniCredit's chief executive, Jean-Pierre Mustier, is stepping down after 4 years amid clashes with the board over strategy. Shares in the Italian bank are sinking this morning. Meanwhile, Credit Suisse is proposing that its next chair be the outgoing chief executive of Lloyd's banking group, Antonio Orta Osorio. Now, shareholders will vote on the nomination in April. Orta Osorio steered Lloyd's to profitability and full private ownership after the financial crisis. Joining us to talk about both these stories is Elisa Martinuzzi, who covers banks for Bloomberg Opinion. Elisa, as always, thank you so much for making the time to come on TV. Elisa, first of all, when you look at UniCredit, and there were rumors that either the board was looking for a replacement of Jean-Pierre Mustier or he was looking to leave. The fact that the share price yesterday on the rumor was down 5%, again down 5.2%, are shareholders worried about what's to come?
I think so, absolutely. I think what we're seeing here is a reaction to a couple of things. One, clearly now the departure of an executive who was clearly achieved quite a lot in the 4 years that he was there. Although some of his decisions may not have been what everyone would have liked to see. For example, UniCredit sold some of its higher growing businesses. He did set out a clear strategy and very much delivered on the targets that he set out. And he had positioned the bank just before the pandemic hit to start returning substantial amounts of capital to shareholders, possibly entering the period in which shareholders would have finally reaped the rewards of his turnaround. So on the one hand, you have a talent vacuum, and on the other hand, you have what appears to be greater intervention from the Italian government, the Italian Treasury, in the kind of role that it would like its banks to play in Italy, and therefore greater commitments to Italy, and including M&A, which he was clearly not in favor of, expanding Italy, UniCredit's footprint in Italy, and resisting, as we understand it, to pressure from taking over the ailing Monte dei Paschi di Siena, which Italy is desperately trying to find a buyer for.
Elisa, what does it mean for the banking system as a whole? I know there are a couple of names of people that could be contenders to replace Mr. Mustier. None of them are bankers, but they're all Italian. Does it give us a sense of exactly what will happen?
Yes, I think it reinforces this theme that we're hearing about, that there seems to be greater pressure on UniCredit to focus more of its growth potentially in Italy. As you say, those names are all Italian. They certainly don't have the breadth and depth of experience that Mustier brought to UniCredit as an executive from outside the inner circle. So I think that those are concerns that investors are going to have, and not least given the pressures on UniCredit to take over Monte Paschi. The worry now will be that whoever succeeds Mustier perhaps won't get as good terms as he was trying to clinch in taking over Monte Paschi, with the state basically paying for a lot of the integration costs and any capital shortfalls. The concern will be that UniCredit will take it over on worse terms.
Elisa, very quickly, what do you make of the possible appointment of the former Lloyd's chief executive as chairman of Credit Suisse?
Well, I guess they now have a Swiss CEO in Thomas Goldstein, which they didn't have for many years. They've had CEOs from outside Switzerland for a long time, and this enabled them to open the search for a chairman outside Switzerland. They brought in somebody who has obviously more international experience, more institutional experience, and contacts that will probably complement Thomas Goldstein very nicely.
Thank you so much. Elisa Martinuzzi there, of course, who specializes in banks for Bloomberg Opinion. Now, coming up, it's a tough year to take over. Italy's presidency of the G20 starts today. We'll discuss the challenges the world is facing with the chair of the G20 Business Summit. That's coming up shortly, and this is Bloomberg.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a taxi.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Federal Reserve Chair Jerome Powell is warning uncertainties remain for the economy despite progress on a vaccine. He says a shot will be positive for the medium term, but things will be challenging for the next few months. Powell didn't give an indication of how the central bank might react, but reiterated it will use all its tools to help the economy. Now, Bitcoin has hit a record, beating its previous high set in December 2017. It takes this year's surge to more than 170%. Even with the recent rally, Bitcoin's ownership remains concentrated with a small number of investors. According to Flipside Crypto, about 2% of accounts control 95% of the digital asset. And Tesla's debut on the S&P 500 will come all at once, likely sending a ripple through the entire market. Money managers will have to adjust their portfolios to make room for the shares of the company worth over $500 billion. S&P had considered adding Tesla in two parts, which would have been unprecedented. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Italy's leadership of the G20 starts today. Yes, the presidency's agenda is based on the three main pillars of people, planet, and prosperity. As well as addressing the challenge of climate change and reducing poverty and inequality, G20 members will be focused on planning their recovery from the coronavirus pandemic. So how can business leaders actually play their part in these momentous tasks? Well, joining us now is Emma Marcegaglia, chair of the G20 Business Summit, the so-called B20 in Italy 2021. Emma Marcegaglia, as always, thank you so much for speaking to us. First of all, is it easier now to talk? Is it easier now to talk at the G20 level because you have a Biden administration that will take over in January that looks more, more willing to look at multilateralism as the way forward?
Yeah, I think you're right. It's always not very easy to talk about multilateralism. We know we are coming from years where there has been a crisis on the multilateral institution, but I really think that with the Biden presidency, probably we can open a dialogue on this. I think, for example, as you know, we still have the appointment of the new Director General WTO. This has been blocked by the US administration. Now probably we can go on that. We can talk about reform of the WTO that now has not been able really to convey new agreement. I think we can talk about climate change together. I think we can talk about a different relationship with China. So I have good hope that we can go back and have a good, table where we can talk about a multilateral agreement, and we can talk about, global problem, because also the pandemic has shown that you need global answers to global problems.
I mean, there was a pretty big trade spat between the U.S. and the EU on a lot of, cheeses, but also subsidies. Will that be different once Biden takes over?
Yeah, I think probably we don't know, because everything has to come, and probably the first months of the Biden administration will be dedicated to internal problems, the pandemic in the U.S., inequalities, a lot of problems. But I think probably the Biden administration will look at Europe more as an ally. Compared with the Trump administration, I think probably we can go back and talk about, as you know, that we have big problem about the Airbus Boeing dispute. We can go back and talk about the data flows. We can go back and talk about a bilateral relationship where we can try to find agreement. Of course, it will not be very easy. When we talk about tariff liberalization, also the Biden administration has talked about Buy American provision in their recovery fund. So it will not be everything easier, but probably at least we will have the chance to sit down and talk about also, bilateral trade agreement.
How much will your work on these topics actually be hijacked by Brexit? We're still looking in the next couple of weeks to see what happens. And how much of the discussion will also be on what's happening with the EU Recovery Fund, which is not going to plan?
Yeah, well, as we all know, of course, the transition period, for EU-UK is coming to an end at the end of this year. So there is no time left. I don't think we can talk about further extension on this. So I really hope that at the end we will find an agreement. There are still some points that are not solved. We're talking about fishing. We are talking about some points on governance. We are talking about competition policy. So still big problems. But I really hope that we will have an agreement, because otherwise this will be a very big problem. As you know, companies are trying to adapt also to a non-deal, scenario. But this will be very bad also, in a situation where all the companies are dealing with the pandemic and the consequences of the pandemic. So it's still difficult, but I really hope that we will find an agreement. And as we said, there is no time left. We have to find an agreement in these weeks, within the end of these weeks. And, as you know, the business community is pushing very strong to really find an agreement between EU and UK.
Emma Marcigaglia, I also wanted to ask you, I mean, there's a big news, of course, in the banking sector in Italy with the departure of Mr. Mustier next year. In general, is there just too much interventionism from the Italian government in private affairs? And do you think that will scare off investors?
Well, I think, with the pandemic and this so strong and unknown and so negative impact COVID that we had, everywhere in the world, the intervention of the state is becoming more important. What I think is that this has to be, only for a certain period of time, but then, the free market and the private companies has to be the real leader of the market and do what they want. In this moment, of course, also in Italy, there is some interventions. Well, I think on banks, here we are more talking about a consolidation process that is going on, and this is also normal. I think, of course, the Monte Paschi issue is there on the table. I understand that there has been different view from, from the board from one side and from Mr. Mustier from the other side. So let's see what happens. The consolidation is fine. The intervention of the state, if it is, has to be only for a very short period of time to try to solve the problem, but then has to go, the situation has to go back to private companies who are the one who know what to do, what kind of investment we need to do, and this. So, and then the government has to put the rules. This is, of course, very important, but not be a real player in the market.
Thank you so much. Emma Marcigaglia there, the chair of the G20 Business Summit, Italy 2021, and of course with some great insight in what could happen in Italy in the future and in charge of the G20. Now, we're also getting some breaking news out of the UK. The retail, the high street, really struggling after some of the coronavirus restrictions. We understand that Debenhams administrators say they will start to wind out Debenhams UK. It's confirming, and this was really the main story over the last couple of days here in the UK. Debenhams has confirmed that the UK operations will close if there's no alternative offer. So we'll have a look at the demise of the high street, exactly all of the number of job loss. I think if you look at Arcadia in total, it's about 13,000 people that will lose their job. Now, our interview with the chair of the British Fashion Council, Stéphanie Fair, is up next. We'll talk about fashion, retail, and the UK. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Credit Suisse is proposing that its next chairman be the outgoing CEO of Lloyd's banking group, Antonio Horta Osorio. Shareholders will vote on the nomination in April. Horta Osorio steered Lloyd's to profitability and full private ownership after the financial crisis. Credit Suisse is trying to reverse a run on low profits. After more than 4 years leading Italy's biggest bank, UniCredit chief Jean-Pierre Mustier is stepping down. The sudden departure follows clashes with the board over strategy and the government's plan to sell its troubled bank, Monte dei Paschi. He will remain in position until April or until a successor is found. And JP Morgan is planning to boost annual bonuses for its sales and trading workers. That's despite payouts declining across the wider company after generating a record $23.5 billion of revenue for the first 9 months of the year. Bloomberg sources say the bonuses will increase by up to 20%. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, we're just getting some breaking news out of the European Central Bank, and this is, of course, on stimulus and the crossroads between stimulus and monetary policy. And this is from Ms. Schnabel saying the ECB stimulus should sustain, not ease, the financial stance. Again, there's quite a lot of theory put in place about what exactly QE is here to do, whether it even works. And she says there's an agreement on joint EU stimulus, which should be absolutely crucial. Of course, she's talking about the spat on the EU Recovery Fund. Now let's talk about retail, and it's a chance for the fashion industry to take stock and celebrate its success. Last year's Fashion Awards welcomed 4,000 guests from around the world to an event at London's Royal Albert Hall. It's really the thing of December in London. Now this year things will be a little bit different. The Fashion Awards will take place digitally this week with the release of a film looking back at the difficult year for the industry. Well, joining us now, Stéphanie Fer, chair of the British Fashion Council. Stephanie, thank you so much. And first of all, congratulations, because I know you've done so much work on trying to do these awards digitally, and I know they're coming up, so we wish you all the best for that. But really, it's a time to take stock also of celebrate fashion, but also go through some of the difficult times. How much have these lockdowns, how much has COVID and the way we shop changed, and how much of an impact will it have on the fashion industry?
Hi, Francine. Yes, it's been a really unprecedented year in fashion. I think everyone uses that term, but it's been particularly hard for the fashion industry. Estimates say that the industry in the UK stands to lose about 10 billion in GDP, dropping from 35 billion contribution. And that's in numbers, but job losses. It's an industry that employs close to 900,000 people. So whilst the BFC represents the top of the industry, this really flows all the way through to the high street. So it's been a very difficult year if you count on the ongoing negotiations around Brexit, you think about COVID, you think about policy changes around tax-free shopping. It's definitely a year of change. But it's also, COVID has functioned as a catalyst to really look at the shakeout that we've been seeing and accelerating trends that we've been seeing in the industry already.
Stephanie, when you look at some of the things that's going on in High Street, so there's about 25,000 jobs at risk because of various bankruptcies. We're talking about Debenhams, we're talking about Arcadia. I know this doesn't translate into the fashion world, but what is the level of angst? Are you worried, and are chief executives coming to you worried that their business cannot stay afloat in these difficult times?
We are definitely worried, and it is devastating for the high street. I think if you just think in terms of job losses, Arcadia is 13,000, and many of those are regional. So it absolutely impacts the industry from top to bottom. And yes, people are worried, but the retail industry really has two sides to it. And it's not all bad. As we said, accelerating trends, and online is a very big trend. So businesses that have really digitized, businesses that are online, businesses who are speaking to the consumer now are doing well. So this is an opportunity to reset around consumer lines, to think about the things that consumers care about: sustainability, the provenance of clothing, the mission and purposes of business. So whilst there is a shakeout and we will see losses, particularly on the high street, there is an opportunity to reset. And there has been a lot of talk for a long time around the high street and online working in tandem, where the high street becomes destinations. So chief executives are thinking about this. They're thinking about how to adapt to this change. But in the meantime, we are seeing these losses and these bankruptcies absolutely not aided by COVID.
Is it too much at once, Stephanie? I know you've always championed a more greener route, a more sustainable route for fashion, but it's much more difficult without the events, without the personal shopping experience, without people being physically able to touch some of the luxury products, to buy online. So is it too tough to ask them also then to look at their supply chains and become more green?
I think it's necessary. I think it's absolutely, whilst it's difficult, it's necessary because the consumer is heading that way. So whilst it's the right thing to do, it's actually the economically viable thing to do. And we've talked a lot about the industry. We issued a joint statement with our partners in the US, the CFDA, the Council of Fashion Designers of America, that this is the opportunity to reset, because those are the businesses that will survive in future. So use this opportunity, we say to brands, as a time to slow down, rethink old practices, rethink distribution channels, rethink overproduction, and go much more direct to consumer, which ultimately will be better for the environment. But yes, we have a lot of external factors. Again, Brexit, COVID, government policy, and we need as much support as we can get right now.
Are companies ready for Brexit? I've asked you in 2016, 2017, 2018, 2019. We're in 2020. Stephanie, just a couple of weeks away. Is everything in place for them to be able to trade no matter what happens?
Yes, we have been talking about Brexit for quite some time, and it's been a long road. We have encouraged businesses to prepare for the challenges of Brexit and to prepare for a no-deal Brexit. That is not what we would like. We still feel strongly that a deal is better for business. Whichever way you stand on Brexit, the WTO regulations that will come in will hit the fashion industry particularly hard because it's a very complex supply chain with a lot of import and export. And so we've already seen businesses make decisions. They've moved their distribution centers to Europe. They're rethinking where they're going to create their manufacturing. So whilst the businesses are prepared for no deal, we would hope that in the last couple of weeks of these negotiations, we could see a deal that is better for business.
Stephanie, thank you so much. Stephanie Fairther, the chair of the British Fashion Council. Now, coming up, Moderna is requesting clearance for its coronavirus vaccine in the U.S. after analysis showed it's highly effective in preventing COVID. We speak to the chief executive, Stéphane Bancel, next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
2 weeks ago, we had the interim analysis of the phase 3. Today, we are announcing the final analysis. 94% efficacy, but the piece that's almost most important for me is the severe cases. We had 30 severe cases, all were on placebo. 0 were with people who got our vaccine. And when you think about what has happened in terms of severe cases leading to hospitalization, leading to ICU, leading to death. This is really, I think, a big moment in the fight against this pandemic. So I think that our goal is to get the vaccine approved in the coming weeks. We're filing today to the FDA, but also in Europe, in the UK, Canada, and many other countries, hoping to get approval in the next few weeks. In the US, for example, the FDA has informed us that they are likely to have on December 17 the advisory committee to the FDA, and then I will expect within 24 to 72 hours after that committee an approval. We are working very closely in the US with Operation Warp Speed, General Perna, who is working to make sure that within 24 hours after approval, products will be out the door and that vaccination can start so we can help protect as many Americans as we can. We have said that we are still on track to deliver up to 20 million doses in the US before the end of the year.
Stefan, how do you imagine it actually working? What does it look like when this starts to get rolled out, when people start to come forward and say they want the vaccine or are being offered the vaccine?
So I think it's going to be like a typical kind of flu vaccination, just at a scale that has never happened in the world in terms of the number of people to be vaccinated at the same time. But basically, I mean, it's like a regular shot. You go, into a private room, you show your arm to a nurse or a doc. They put a little, piece of anti-infectant to clean your arm. They inject the product. They put a Band-Aid, and then next one, you need to get your boost 30 days after. So there's a lot of system being developed by the government to be able to track which vaccine you got in your prime injection so that you get the same vaccination by the same manufacturer for your boost. But that's how it's going to look like. And so if you go back to the data, if you get our vaccine, what do we know now? You have 94% chance of having no disease if you get infected. If you get our vaccine and you get infected, 94% chance to get no disease. And in the small percent chance that you have to get disease, it will be mild disease. Because as we said, we got 0 severe disease. And this is why I think vaccination is going to be so important to stop this pandemic so that we can save lives and go back to normal.
Can you help us break down the data older than 65? Any sort of effects? What have you noticed in your testing?
So we have not yet disclosed. We will do that when the FDA meeting meets. The data is just primary top line because we literally got it yesterday. The team is QCing everything. If you look at it, around a third of the study was the elderly, above 65-year-old, 30% of 30,000 people. And so what we've said is, like in the previous interim analysis, the elderly data is very similar to other age group. People with diabetes or other comorbidity factor are also very high efficacy. So by the time we meet with the FDA on December 17 for the advisory board, we will have all the details, and most probably those will be put online by the FDA in a briefing book a few days before the advisory board, as it's usually done by the FDA.
Stefan, is there anybody that shouldn't get the vaccine?
So today, the study has only been done for people above the age of 18. So we are going to start very soon this year a study in teenagers. So the teenagers should not get vaccinated because there is no safety data or efficacy data available yet.
Well, that was the Moderna chief executive, Stéphane Bancel, speaking to Alex Steele and Guy Johnson. Now, a lot of the focus on the markets is, of course, not only on what's going on in equities today. After the month of November, it is the 1st of December, but a lot of talk, of course, about oil. We'll look at OPEC Plus, what they'll do next, and we'll talk about Bitcoin. More Bloomberg surveillance next.
another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
OPEC breakdown. The group delays output talks until Thursday after ministers failed to reach a deal. C-suite clash. UniCredit Chief Executive Jean-Pierre Mustier is stepping down after arguments with board members over strategy. The bank prepares its search for its successor. Shares sink. And Credit Suisse's new chairman, the Swiss bank, taps outgoing Lloyds Group Chief Executive Antonio Horta Osorio as its next chairman, looking outside the Swiss establishment. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Lisa Abramovitz stepping in for Tom Keene in New York. And Lisa, I think we're just getting some breaking news out of Pfizer. I know this is news that actually could move the market, so let's get straight to it. So I don't know if you see it.
Yes,
or
I've got it
otherwise
here.
I'll try and pull it up.
So right now we're looking at Pfizer and BioNTech seeking EU clearance for the COVID-19 vaccine. This follows what we saw yesterday in the United States with Moderna. The objective, getting the vaccine out to individuals in distribution by the end of the year. The formal application caps a period of speculation that this would be occurring. We are seeing Pfizer in pre-market rise nearly 2%, BioNTech down 0.3%. Interesting to see how this is coming and confirming, frankly, what a lot of people have expected, but just, Francine, adding to the risk-on feel that we're seeing in markets today, the sense we are going to move past this period that has been incredibly painful economically as well as socially.
Yeah, so let's get the details now from our Sam Fazeli, who leads our pharmaceutical coverage for Bloomberg Intelligence. Sam, the news is out. How how quickly can some of these clearances be actually given?
Hi, good morning, Francine. So obviously in the U.S. we have the FDA meeting coming up on the 10th of December. So it's possible that they move on that pretty quickly the next day or the day after. And then in Europe, this is a culmination of a process that started off sometime in early October, where the companies have been filing their manufacturing details, etc., paperwork, and now they've completed the file with all the data. There's no new data in the press release, so it's possible that we should get a European response before the end of the year as well.
Is it a bigger challenge to get regulatory approval, Sam, or is it then actually a bigger challenge to get out there and have a distribution system where people get vaccinated in a timely fashion?
Yeah, so the regulatory side of things, really good question, Francine. The regulatory side of things is a well-known process, and in this particular case, the regulators have been involved all along across the Atlantic and across the globe. So there should be little room for major surprise unless there's something in the data that they don't like, which would be really surprising given that the companies have built up so much hope around the vaccines. So I think distribution and, of course, that usual problem of getting people through the door to take a jab is going to be the bigger challenge in my view.
Just to add a little bit of color to the news that's breaking that Pfizer and BioNTech are going to seek conditional European clearance for their COVID-19 vaccine. They also have sought conditional clearance in the regulatory submissions in other countries around the world, including Australia, Canada, and Japan, again, trying to expedite the rollout of the vaccine, trying to get it into distribution, and to quote you, Sam, to get those jabs in the arm by the end of the year. When we talk about the rollout of this program, when do we start to see the critical mass? When do we start to see these shots being distributed beyond perhaps the older care homes as well as the first healthcare responders?
Yeah, so I think that I would expect to see some of that happening in getting close to the end of the first quarter. It all depends on when the doses start flowing. So if you, for example, take the UK as an example, you will have something in the region of enough doses for about 23.5 million people from Pfizer and Moderna. I suspect that will definitely cover the healthcare workers and frontline workers, and then some of the more susceptible folks in the age bracket above 65. So, but to get beyond that, we need to, in my view, we need to go into the back end of Q1 into Q2.
So we're looking right now, we are seeing the shares of BioNTech and Pfizer both climb a little bit more in pre-market trading after the release of this information, but it really isn't a momentous move. And Sam, I'm wondering at this point, what has been baked into the market valuations? What could actually be an upside surprise shock to give people a sense that we're going to get a vaccine sooner and more widely distributed?
An upside surprise would be if another vaccine comes back out with a 90% plus efficacy. The downside risk is that as the data gathers for safety, something odd or rare happens in safety trials. But every day that passes and we don't hear anything is a great day. So those are the two directions I think that this can go.
Sam, is there a danger that, the UK approves it before the EU, that the US approves it before the EU? And does that actually send the wrong signal to people that then have to decide whether they get vaccinated or not?
Not really. I mean, at the end of the day, which regulator approves when is based on the speed with which they can review the data. If you have 500 people sit in a room and look at a data package of 500 pages, it will get faster than 100 people. So it really is, I wouldn't read too much into the speed with which the regulators get through this. They are professionals and they know their job, and they'll be everyone will be looking at this data with a serious eye to safety, and then, of course, understanding the efficacy. So I don't think there's any issues or worries there.
So where are we with the other ones, Sam? We understand that, Moderna is also seeking approval, Pfizer seeking approval, but AstraZeneca has to go back to trials.
Well, Astra still has an opportunity here. We just need to see the data presented in a straight fashion as to they had two trials, show us the data for the two trials. I expect that to come sometime in the next few days as regards a publication, possibly in the Lancet, is what I'm hearing. So that could still come back. We might end up seeing that it works really well in the younger population, or the details are the key here. And then, of course, you've got Novavax in the early first quarter 2021. And I'm optimistic on that one as well.
All right, thank you so much. Sam Fazeli there of Bloomberg Intelligence, of course, watching this very, very closely for us. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Fed Chairman Jerome Powell will warn lawmakers that the U.S. economy is still in a damaged and uncertain state. Powell testifies today before the Senate Banking Committee. In prepared remarks, he said that recent news about vaccines is very positive for the medium term. Still, Powell said a resurgence of the coronavirus is concerning. Vice President Mike Pence is signaling that regulators will quickly approve an emergency authorization for the first coronavirus vaccines. Pence told governors that vaccines could start to be distributed the third week of December. One governor says it's not clear who should get the first doses. And OPEC and its allies need more time to reach a deal on oil production policy. A meeting broke down without any agreement, and energy ministers will try again Thursday instead of today. That will allow more time to figure out whether to delay a planned increase in output starting in January. Supporters say the market is too fragile to absorb more oil. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Monica, thank you so much. Now, this is what the markets are looking at after the pretty impressive month of November that we have. It is, yes, a reminder to everyone, December 1st. I'm not sure how that happened. Days are slow and fast at the same time. As stocks are bouncing back, U.S. futures also bouncing back. If you look at a gauge of dollar, it's falling to the lowest since April 2018. Bitcoin trading close to a record. Gold edges up after the decline. And overall, there's a lot of, company news when it comes to, for example, some of the banks. Oil falling for a third day as OPEC Plus sought more time to reach a deal on production after, for the moment, they don't have one. Lisa.
Francine, I love that Tom Keene goes on vacation, and I feel like we should go wall-to-wall Bitcoin as it reaches a record high. In the meantime, if you slip up the boards and you take a look at what's going on ahead of U.S. markets, you could see the S&P futures are higher, near session highs after that Pfizer BioNTech news, up 95 basis points, 36.57.75. The euro climbing toward the highest in several years. We're looking at that 120 mark, very much getting closer, 119.76, up 0.4%. Really interesting. Kit Jukes of Societe Generale put out a note this morning saying, yes, the dollar is on the back foot, but who is on the front foot? Meanwhile, we're seeing 10-year yields climb just a touch, and copper futures hitting a new all-time high after an incredible streak of gains. Just interesting to see how manufacturing, Francine, continues to give a boost to that metal.
Yeah, we're getting some, these OECD cutting its 2021 global growth forecast to 4.2% from 5% previously. It's also interesting, Lisa, to go through the notes, for example, of Goldman Sachs, that actually thinks that the vaccine is a real game changer. They see a broad and deep recovery as soon as it's widely available. So different views on exactly the impact this could have, not only on global growth, but on inflation forecast. Now, we'll hear from Laurence Boone, OECD chief economist. That's at 7:30 a.m. in New York, at 12:30 p.m. in London. And this is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is Bloomberg Surveillance. I'm Francine Lacroix here in London. Lisa Abramovitz in New York. Now, joining us to talk about the markets, to talk about some of the European assets and maybe that recovery fund is David Riley, Blue Bay Asset Management Chief Investment Strategist. David, always good to speak to you, so thank you so much for coming on Surveillance. I know you've always been invested with quite a lot of conviction on some of these European fixed income. And, some of the periphery bonds is something definitely that you were looking at. Is it still the case? Or, even the Portuguese Treasury's 10-year yield is nearing zero.
Yeah, it's been a pretty impressive rally, I think, for European peripheral credit and actually for sort of European credit more generally. And that's been, in large part driven by, obviously, the search for income, as well as, what has been a pretty broad-based and impressive sort of policy response. I mean, valuations right now, I still do like Italian BTPs, but clearly valuations aren't as attractive as they were. But I still think it's kind of going to grind tighter. I mean, with the ECB likely to increase its asset purchases at its meeting in December, then actually sort of net supply next year into the market by European governments is basically going to be largely absorbed by by the ECB. So I still think it kind of grinds tighter, but I do actually think there's sort of opportunities elsewhere which offer sort of greater upside, in my opinion.
So what are you liking at the moment, David?
Well, I mean, the asset class which I do like a lot because I do think it's mispriced is European bank capital instruments, in particular CoCo bonds or additional tier 1 bonds. I mean, they're currently yielding, in excess of 4%. So in euro terms, and some of the national champions more like sort of 5% on those bonds, and that's twice as much as you'd get on a BB rated European corporate. And banks, as you've been discussing, I mean, banks are a cyclical asset. So in a sustained economic recovery, concerns around asset quality decline, earnings outlook start to improve. And from a creditor point of view, I think they've come through this crisis as a pretty well. I mean, it's been a pretty severe stress test, and I think it's sort of highlighted just how much stronger the credit fundamentals of banks actually are. So I think that's a good place for investors to play both the kind of rotation from growth to value, from sort of defensive to cyclical assets, and where I think there is some meaningful mispricing.
So let's take a step back from the contingent capital bonds, because these actually are some of the riskiest of risky bonds, because they will be the first to be wiped out should banks have to go below certain capital requirements. And this would happen, say, if loan losses rose above a certain level. We're looking right now at the OECD coming out with projection, cutting their 2021 global growth forecast to 4.2% from 5%. How is it that we're not pricing in, or that basically, how should I put this, that there are not going to be, say, the loan losses that people had expected previously, even as we see the projections for global growth decline?
Yeah, it's absolutely correct that, given the severity of the recession that we've seen, across Europe and, and more generally, one would have expected greater loan losses, and one would have expected, much higher levels of default. But I think that underscores the extent to which policy support, and particularly government support, has, meaningfully reduced the volume of defaults. So European high yield default rate is running at less than 2%. Actually, insolvencies, bankruptcies are actually lower this year than they were in 2019 in Germany and in France. You've had governments that provided guarantees on bank loans to the corporate sector. And then you've had the things like the furlough and short-time working schemes, which have helped reduce operating costs for companies as well. So, this has been a very unique or different recession and downturn than we've seen previously. Clearly, there has been a hit on banks. Banks have provisioned, but we're starting to see banks start to release some of that loan loss provisioning, and we think that will continue through next year as well.
David, a lot of commentators come on and they say that central banks and fiscal policymakers have created this sort of perverse consequence of showing investors they're going to be bailed out no matter what if things start to deteriorate. Are you saying stop judging whether that's good or bad, lean into it, buy risk, because frankly, that's the reality?
Well, I mean, I think the reality is that the nature, this crisis and this recession wasn't caused by excessive levels of leverage in the private sector. It wasn't caused by large financial imbalances or a credit bubble. It was caused by the virus. In that sense, it was like a sort of natural disaster. And the policy response to that, I think, has been the right one, which is to provide a fiscal and financial bridge to the other side, and to reduce the amount of economic scarring that occurs as a result of this crisis. A lot of the businesses where I also think there's going to be value is going to be in the COVID impacted sectors, in leisure, in travel, car, auto rentals, those kinds of businesses. And they're not facing sort of a structural sort of headwind like sort of brick and mortar retail, if you like, shifting on, facing the challenging of the shift on online. I think, with the rollout of the vaccine, and if that's effective and successful, then, we're going to want to go back on holidays. We're going to want to go to the cinema. We're going to go on, holidays, for example. So I think, and sporting events. So all of these things, I think, have, an underlying viable business models. And I think the policy response has been appropriate to keep those going. There will be a legacy where we have a lot of debt. There's no doubt about that. But I also think we're going to see some deleveraging during the course of next year as well, which is a pretty favourable backdrop, I think, for credit investors more generally.
David, when we go back on holiday and we go back to a bit more normality, does inflation suddenly pick up, or are we just kind of like above water thanks to the QE that's not doing much except pushing back the spectre of deflation?
Yeah, I mean, I still think that we're in a. I mean, it depends on obviously the how rapid and complete the economic recovery is, and in that respect, the vaccines announcements have been a game changer, not least because the efficacy rates are so much higher than have been previously expected, which means that, it does raise the prospect of not only a faster rebound, but also a more complete recovery, less economic scarring. Now, if that happens more quickly, while, central banks and the Fed, for example, is sort of committed, if you like, to be behind the curve, that's essentially what they're doing now with their average inflation targeting regime that ECB and other central banks are likely to follow in one form or other, then I think there is some potential that you then do get a later pickup in inflation. But it's we've been talking about this story of a pickup in inflation for some time, and I think the bond market's still pretty sceptical about that, and it's not something which would be part of my base case. But I do think we're going to see a playbook which is similar to 2017, where we had a global broad-based recovery, cyclical assets outperformed, emerging markets outperformed in that recovery, and actually central banks, supported that while, by maintaining very easy policy during that period. So the one thing we didn't get in 2017 was any kind of meaningful steepening in the yield curve.
Thanks so much, David Riley there of Blue Bay Asset Management stays with us. Now, coming up in the next hour, Jim Caron, Morgan Stanley Investment Management Fixed Income Portfolio Manager. That's coming up at 6 a.m. in New York, 11 a.m. in London. We'll ask him about inflation and the growth model. This is Bloomberg.
have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. Credit Suisse is proposing that its next chairman be the outgoing CEO of Lloyd's banking group, Antonia Orta-Osorio. Shareholders will vote on the nomination in April. Orta-Osorio steered Lloyd's to profitability and full private ownership after the financial crisis. Credit Suisse is trying to reverse a run of low profits. And Tesla will be added to the S&P 500 in one shot on December the 21st. That's a move that will ripple through the entire market. Money managers will have to adjust their portfolios to make room for a company worth $538 billion. S&P had considered adding Tesla in two parts because of its size. It will be the 7th largest company in the index. And that is your latest Bloomberg Business Flash. Francine.
Ritika, thank you so much. So that's it for the month of November, one of the biggest rallies on record when it comes to stocks. Here comes December. Now, the focus, of course, is on oil, firmly with the OPEC Plus not managing to find a decision, so they'll re-meet on Thursday. The focus is also, of course, on Bitcoin. Now, coming up, Martin Ratz, Morgan Stanley Global Oil Strategist, will talk about OPEC, American crude oil, 45.38. This is Bloomberg.
Retirement is confusing.
That's one reason why 42% of people age 18 to 29 have no savings, and partially because of things like student loans and other priorities like just being able to pay rent. But if you do have the means to save it all, here are some ways to get started. First, there's the one everyone thinks about, which is your 401k. This is a savings account that lowers your taxable income because you don't have to pay taxes on the money you contribute. The downside is that when you take that money out, you have to pay taxes based on the income bracket you're in at retirement age. But there's one major benefit to your 401k. Employers often offer contribution matching, which means essentially you're getting free money. Another option is the Roth IRA. With this, you pay taxes now on the money you put in. This gives you a savings account you can withdraw money from at retirement without having to pay taxes on the money you take out. You can only put $6,000 a year into a Roth. This is also a great option because with a traditional 401k, you may have to pay a penalty if you have to cash that money out early, but that's not the case with a Roth. Most financial experts suggest a combination of the two if you're able. To save more and worry less, you can set up automatic transfers into a savings account from your regular bank or credit union. Tools like Betterment can also help you set up automatic payments into a Roth IRA so that investing can be simple and mindless.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I desperately believe that we need more stimulus, and we need more stimulus today. I would beg Congress to go back to work and pass a stimulus bill this week. There's no time like the present. Dollars put back in consumers' pockets would be very, very important.
That was former National Economic Council Director Gary Cohn, now co-founder of Robbins Holdings, speaking yesterday to Bloomberg Television, raising a question of whether we've got enough fiscal support. Some people actually coming out and saying yes, others saying, like Gary Cohn said, Congress, get on it. There is no time like the present. Joining us right now, David Riley of Blue Bay Asset Management, sticking with us. And I'm wondering, from your perspective, David, how important is it that policymakers, not only in the United States, but also in the EU, get together and pass some comprehensive fiscal support package, given how much support they've already provided?
Yeah, I mean, look, what's one of the key, I think, lessons for policymakers from the global financial crisis and its aftermath was that fiscal support for the recovery was withdrawn far too quickly. I mean, we essentially entered into, austerity, fiscal austerity from 2010 onwards, and that was in Europe, but also actually in the United States as well. And I think that's part of the reason why the recovery was that much weaker than it otherwise could have been. I think there is a danger that with the prospect of a vaccine, concerns around the overall levels of public debt, that you do get a withdrawal of some of this fiscal support or push or lose some of that political will. We're seeing that play out obviously in Washington, and for different reasons, we're seeing some pushback in terms of the European recovery fund. So I do think that's a danger. That being said, in the case of the US, where I do think they do need to provide some additional fiscal support, it's also clear, as we were talking about before, Lisa, in terms of the policy support, that US households in aggregate are actually in a pretty good place. There's a lot of savings rates are pretty high. There's a lot of money still in things like US money market funds. I think the issue, though, is that this, the inequality within the US means that for the lower income groups and those groups, have been the most heavily affected by the economic downturn as well as by the virus, they do need some additional support, and hopefully we will get that at some point, although I suspect it won't be until sometime early in 2021.
But David, this is sort of the contradiction or the conundrum baked into your comments there. Balance sheets in the U.S. in aggregate look pretty good. When you drill down, huge disparities. The question from a market's perspective, if you want to take a colder, harder, more just money look at the matter, Does that matter for your calls with respect to credit? In other words, will it affect your investment strategy if there is not another round of fiscal support passed in the United States? Is this just an issue, or not just an issue, but primarily an issue of social equity rather than a holistic market performance?
Yeah, no, I mean, it's important from a macro and from a growth perspective. It's not solely about social equity, and providing that support will mean that more jobs are saved, or there's a faster pace of rehiring that will improve confidence. It will support household incomes more generally as well, and there does need to be some extension of things like the payment protection scheme. Pretty effective in terms of providing that support. So it's not just about social equity. I mean, I do think that we'll get something like close to a $750 to $1 trillion. That's still a meaningful fiscal boost, albeit quite a bit less than we had with the CARES Act and obviously what was expected under a so-called blue wave. If we don't get that, does it sort of fundamentally change the way that construct the portfolio? I mean, it reduces the sort of quantum of risk that you're deploying into the sort of the higher risk parts of the credit market. So it will kind of reduce the quantum of the risk that you're putting in, but I don't think it changes the overall fundamental story, which is that we are going to see, I think, with a successful rollout of the vaccine, a strong economic rebound during the course of 2021, and I think it's right that investors should try to position for that, and I think that's really what's been driving clearly the price action that we've seen since early November.
David, we're a couple of weeks away from Brexit. Is it time to buy UK assets?
Yeah, look, I mean, I think, let's hope Brexit gets done and dusted and we never have to sort of discuss it again. And I think, a deal will be done. I think we'll get a bit of a pop in sterling on the back of that, but actually not that large a one. It's certainly not going to be a good deal for the UK economy, because it doesn't cover, the service sector. It doesn't cover financial service, which are obviously very important parts of the UK economy. In terms of UK assets, though, certainly large cap companies in the UK are basically sort of dominated by the sort of value sector, as banks, as miners. On most metrics, they look pretty cheap, and they're quite leveraged to a rebound in global trade. So I think what matters more for UK assets is actually less about Brexit and the Brexit deal that I think is going to happen, and more about, if you buy into this sort of global synchronized recovery. And if you do, then I think UK assets offer some growth sensitive assets, offer some value.
Thank you so much, David Riley there, Blue Bay Asset Management Chief Investment Strategist. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Joe Biden is setting up his first confirmation fight by naming Neera Tundon to be his budget chief. Tundon's nomination drew swift objections from Republican senators who will vote on her. Texas Senator John Cornyn called her selection radioactive. Tundon is a longtime Democratic operative who has frequently criticized Republicans on Twitter. Senate Majority Leader Mitch McConnell has set up a vote to advance the nomination of Christopher Waller to the Federal Reserve Board. Waller is research director at the St. Louis Fed, but McConnell has taken no action to open Judy Shelton's path to the Fed. That dims the chances for the controversial nominee. Her confirmation was blocked before the Thanksgiving break. And White House coronavirus advisor Scott Atlas is resigning. Atlas won President Trump's favor by advocating a loosening of social distancing restrictions. But he was criticized by other members of the White House panel for describing lockdowns as harmful to Americans. Atlas is a neurologist with no background in public health or infectious diseases. ExxonMobil is about to face the biggest write-down in its modern history. Exxon says it will write down the value of North and South American natural gas fields by $17 to $20 billion. Meanwhile, the company will drastically reduce capital spending through 2025. Exxon has been hammered by the collapse in oil prices, a global supply glut, and the pandemic-driven crash in fuel sales. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Lisa.
Thank you so much, Ritika. Coming up is part of Bloomberg's Sustainable Business Summit, Ned Siegel, Twitter Chief Financial Officer. That's at 3:30 p.m. in New York, 8:30 p.m. in London. From New York and London, this is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Surveillance. I'm Francine Lack in London. Lisa Abramovitz in New York. Let's talk about the price of oil, and OPEC and its allies need more time to reach a deal on production policy. Now, production capacity, rather. This is after talks yesterday ended without an agreement, and ministers will now meet on Thursday instead of today. Now, joining us is Martin Ratz. He's Morgan Stanley Global Oil Strategist. Martin, always great to speak to you to get your thoughts. I mean, this was pretty surprising, the fact that they've had to delay it for a couple of days. Does it really go to, just show that there's so much political uneasiness about some of the allies, or is it just a strategic, longer-term question that they're trying to answer?
Yeah, our reading of the situation is that there is indeed a truly sort of strategic, long-term underlying sort of consideration here. OPEC faces an increasingly difficult dilemma. The question that has come up in the March meeting, it's coming up now, it will come up many, many times in future years, is this: do we cut production now, which has obvious short-term benefits in terms of defending the price, or do we start defending our market share for the long run? And this is an increasingly pertinent choice. In the past, OPEC always set its oil policy against the backdrop of rising oil demand. Oil demand has grown 1.2, 1.3 million barrels a day year over year for decades. If that is the case, then ultimately there is room for everybody in the oil market if demand steadily grows. But I think even the staunchest oil optimist will have to recognize that there is at least some probability that oil demand will peak sometime in the 2030s and will then start to decline. And when peak oil demand appears on the horizon, immediately you're competing for a pool of of remaining oil demand that is a finite number. Might still be a very large number, but it's a finite number. And then market share becomes very important. So the question in terms of OPEC oil policy is, do we run it for the short run or do we run it for the long run? And different countries have different trade-offs in terms of how much short-term pain they can withstand for the longer-term benefits. That's not the same for every country. And that is ultimately, in my reading, where a lot of this tension is coming from. If you give up too much market share for too long, ultimately you're going to be the one leaving oil in the ground. And that is not a favorable outcome for OPEC either, of course.
Martin, are we going to see countries leave OPEC? And if it does, what I mean, is that it for the cartel?
Well, look, to say that this is the billion-dollar question would be slightly understating it. I would not expect that soon, as in this story or this expectation about oil demand peaking is on the horizon, but it's still quite far out. Just being practical about it, I would suspect that the cohesion that has been built up over the last few years will last a little bit longer. But as time goes by, and this issue of oil demand peaking becomes more and more pertinent, then the competition for market share, either OPEC versus non-OPEC or within OPEC itself, becomes ever more intense. And under those circumstances, you could. There are only two options that are in the end then stable. It's either more countries joining OPEC, so that the entire oil industry becomes coordinated, but that seems very unlikely, or ultimately countries leaving OPEC and competing for market share in their own right. Still quite a few years off, I would imagine, but ultimately that is part of the range of possible outcomes.
Martin, U.S. shale production used to be some sort of pressure to OPEC Plus. Has that not disappeared, but diminished greatly as a result of the decline in production this year?
Yeah, I would take a slightly more cautious view on that. I know that there's a widespread expectation that this is indeed so, that U.S. shale production will decline in the first half of next year, and it will almost inevitably do that because the rig count at some point fell to such a low level that the declines are very likely in the first half of last year. But this I find very interesting. 12-month forward WTI reached $43, $44 a barrel at the start of August. And I'm mentioning 12-month forward WTI because that is not a price that anybody needs to speculate about, right? 12-month forward WTI of an E&P company, you can lock that in. It reached that level, $43, $40 at the start of August. From the middle of August until last week, we've added 75 horizontal rigs in the United States. We've been adding 5 rigs a week since WTI, 12-month forward WTI, got into that low 40s level, which clearly signals that low 40s passes through a number of very important break-even levels for U.S. shale, even today. Now, look, the rig count came from exceptionally low levels, so this decline in the first half is arguably baked in. But oil at this level, or lo and behold, it rises another $5, the rig count will continue to grow because you're looking at spreads between break-evens and hedgeable oil prices that are simply very attractive. If we add another 75 rigs, say over the next 15 weeks, right, the same as what we've done over the last 15 weeks, then we're ending up with 360, 370 horizontal rigs in the United States. Then we're growing production in the second half of next year and arguably growing again then in early 2022. When that comes on the horizon, I think it will start to inform OPEC policy. It's more, you have to look slightly longer into the future than just focusing on the first half of next year.
Well, we'll have to get you back in the not-so-distant future. Thank you so much for joining us. Martin Ratz, Morgan Stanley Global Oil Strategist. Coming up on Bloomberg Technology, Carla Harris, Morgan Stanley Vice Chair of Wealth Management. That's at 5:30 p.m. in New York, 10:30 p.m. in London. This is Bloomberg.
लेवल सिर्फ और सिर्फ इस इलाके में ड्रिप इरिगेशन सिस्टम की वजह से है और इससे हमारा मुस्तकबिल भी और इससे हम फ़ायदा भी ले रहे हैं।
तकरीबन 20,000 स्क्वायर किलोमीटर लैंड जो है वो अबंडेंट पड़ी है, जिस पे कुछ भी एग्रीकल्चर टेक्निकल तरीके से नहीं हो रही।
Never met, obviously, Walt Disney, but if you had a chance to talk to him, what would you want to ask?
Obviously, probably the number one question would be, how am I doing?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. JP Morgan plans to raise annual bonuses for sales and trading workers. At the same time, payouts are set to decline across the rest of the bank. Bloomberg's learned that traders may see bonuses rise by 15 to 20%. The business generated a record $23.5 billion in revenue the first 9 months of the year. Citigroup CEO Michael Corbat is pleased with Joe Biden's choice for Treasury Secretary. Corbat discusses Janet Yellen with David Rubenstein.
I would say that not just Citi, but I think the banking industry had a good relationship with her. And if she is elected into or if she is voted into the seat, I think she'll do a great job. And I would expect that relationship to continue. And I'd also, shout out another glass ceiling broken in terms of her then becoming the first female Secretary of Treasury, which would be another great one for the books.
That was Citi CEO Michael Corbat. Catch David Rubenstein's full interview with Michael Corbat this Friday at 10 a.m. Eastern on Bloomberg Invest Talks to find how Citibank is managing the COVID-19 crisis and the potential impact on bonuses. And that is your latest Bloomberg Business Flash. Francine.
Ritika, thank you so much. Now, after more than 4 years leading Italy's biggest bank, or second biggest bank, UniCredit chief Jean-Pierre Mustier is stepping down. The sudden departure follows clashes with the board over the bank's strategy, while shares in the Italian bank are sinking this morning. Joining us with the very latest is Elisa Martinuzzi from Bloomberg Opinion, who specializes, of course, in banks. And yesterday, about half an hour after the news broke, also wrote a beautiful Bloomberg Opinion piece on how it's tough being a French man heading an Italian bank. Elisa, thank you so much for joining us. If you look at the disagreements between the board and Jean-Pierre Mustier, it seems to be all about M&A and UniCredit buying Monte Paschi. Would it make sense for UniCredit to buy this, old Italian bank?
Well, you raise a very valid question. There's obviously been, from what we understand from press report, pushback by the outgoing CEO, Jean-Pierre Mustier, on this very deal, notwithstanding the fact that he's been pushing for very juicy terms, as we understand it. He has been seeking reassurances from the government that they would foot any potential bills relating to integration costs, any capital shortfalls. But I think, strategically, it's not the most obvious of deals because it reinforces UniCredit in parts of Italy where it doesn't need to be stronger, while not reinforcing it in, for example, the region of Lombardy, which is the sort of the growth engine of Italy, where UniCredit could do with a bigger footprint. And equally, it is an opportunity cost in the way of a potential distraction from other deals that may come up. I think the Mustier has presented his plan as very much a standalone plan for the bank going forward. I suspect that cross-border M&A, maybe in Germany, might have been something he would have considered had that opportunity come up.
So, Elisa, the share price yesterday was down 5%. Today, it's down almost 6%. What are investors actually worried about?
Well, I think there are a couple of things. One is obviously the strategic challenge and whether this now means that UniCredit will be more Italian at all costs, as we're seeing sort of the state favour a focus on Italy by the Italian lenders. But equally, he does leave a talent vacuum, though not everybody would agree with some of the strategic decisions. He sold some businesses that were potentially very high growth, such as the digital bank. He did set out some very clear targets, and, unlike a lot of his peers, he delivered on them within the time frame, not ahead of the time frame. So it made him a very credible leader, and now he leaves a vacuum.
More Italian at all costs. What does that mean in terms of strategy?
Well, I think, given the economic uncertainty that lies ahead for Italy, it's not obvious that, the bank would want to grow there. And, this is what investors will now be worried about, that, somehow the new management that follows Mustier would be, less diligent in its analysis of growing in its home country at a time in which, as I said, the economy, is going to be severely hit from the pandemic, which is hurting, small and medium-sized companies in particular, which Italy is very exposed to, and the tourist sector as well, of course, which makes up a large chunk of the GDP.
But it raises a question about cross-border banking activity and where in Europe there is an opportunity for UniCredit, given how overbanked a lot of the continent is.
Yes, no, absolutely. And I think, there are still some significant hurdles to that cross-border combinations. The banking union is not complete, and that means banks aren't able to move capital around freely between nations, and that makes any cross-border deal less appealing. But there is a push in Europe to deepen the European project, to deepen banking union, and those opportunities at some point will come up.
Elisa, some of the names that could actually replace Mr. Mustier, and of course nothing's confirmed at the moment, but they're all Italian names. None of them are actually, or almost none of them, except for one, are part of, banking names. Does it mean that this will be a new Italy, where government intervention just wants more Italianism at the head? And what does it mean for investors looking to invest in the country?
I would caution this is, early days of what appears from the outside to be early days in that search for candidates. So yes, at the moment we are seeing Italians, and Italians, as you say, not necessarily from banking, and certainly not from sort of leadership positions, or significantly leadership positions in Italy. But yes, I think, what we're seeing, not just in Italy, but obviously across Europe, we have seen governments obviously being the guarantor of a significant amount of lending that banks have extended on the government's behalf through the pandemic, and that will inevitably tighten the link between banks and their governments.
Elisa, thanks so much. Elisa Martinuzzi, who covers banks for Bloomberg Opinion. Now, coming up in the next hour, Jim Caron, Morgan Stanley Investment Management Fixed Income Portfolio Manager.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
OPEC breakdown. The group delays output talks until Thursday after ministers fail to reach a deal. C-suite clash. UniCredit Chief Executive Jean-Pierre Mustier is stepping down after arguments with board members over strategy while the bank prepares its search for his successor. Shares sink. And there's quite a lot going on with Pfizer. We just had news in the last hour or so that they will seek approval, maybe soon, or at least sooner than some of their counterparts. Pfizer and BioNTech see EU clearance for the COVID-19 vaccine. Good morning, everyone. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Lisa Abramovitz stepping in for Tom Keene in New York, who's still going after his Thanksgiving leftovers. I don't know if we're looking at turkey sandwiches. I know he's posting quite a lot of cooking on his Twitter feed.
Yeah, he's trying to go for the cooking channel, we hear, and he evidently has Vet Bill as a companion. Look, he's missing out.
Always in black and white.
Always in black and white. Tom Keene is having quite a special series on Twitter. Check it out. In the meantime, we are checking out the news about vaccines that keeps coming out positively, and that melt up after a record-breaking November continues today, Francine, as people get hopeful of the time beyond the pandemic.
Yeah, we also look at Bitcoin. We look at gold. We look at Bitcoin. There's still quite a lot going on in the markets for this December 1st. Now, let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Thanks, Francine. Fed Chairman Jerome Powell will warn lawmakers that the U.S. economy is still in a damaged and uncertain state. Powell testifies today before the Senate Banking Committee. In prepared remarks, he said that recent news about vaccines is very positive for the medium term. Still, Powell said a resurgence of the coronavirus is concerning. Pfizer and its partner BioNTech have asked for regulatory clearance for their coronavirus vaccine in Europe. That puts it on track for a potential approval there before the end of the year. A study of almost 44,000 people showed the vaccine prevented 95% of symptomatic coronavirus cases. And British Prime Minister Boris Johnson is fighting to win support for his virus strategy from his own Conservative Party. Lawmakers threatened to undermine his authority in a vote in the House of Commons today. Johnson is defending what he calls his tough rules that England will face when a national lockdown ends this week. But Conservative rebels said they will oppose his plan. OPEC and its allies need more time to reach a deal on oil production policy. A meeting broke down without any agreement, and energy ministers will try again Thursday instead of today. That will allow more time to figure out whether to delay a planned increase in output starting in January. Supporters say the market is just too fragile to absorb more oil. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Thank you so much, Ritika. Now, this is what the markets are focusing on. So first, we're seeing a bit of a lift to the markets. We are seeing, though, a little bit of pressure on some of the oil stocks, and certainly oil, if you look at American crude at $45.25. Now, overall, stocks are bouncing back. Of course, it is the start of December, and this brings a bit more of a bullish note across. Risk-on mood carrying across other markets. I'm also looking at Bitcoin approaching 20,000, 19,808 is where we're seeing at the moment. Dollar weakening against most of its major peers. And then, of course, we'll spend a good amount of time talking about gold and where it goes from here, Lisa.
Yeah, so curious kind of situation right now with people using gold at Bitcoin sort of in tandem. Meanwhile, ahead of the U.S. Open, you're seeing that similar risk-on move. S&P futures near session highs. Right now, we're looking at an index at 3662.50, up about 1.1%. The euro, the strongest versus the dollar right now since May 2018, almost breaking that 120 mark, 119.65. 10-year yields just bleed upwards a little bit south of 2 basis points to 85.53 basis points. And then copper hitting a new all-time high. I find this so fascinating. It just shows, Francine, the diverging fates of the U.S. and China. China really driving some of that increase in copper prices as it posts much better than expected manufacturing data. Let's shift gears and talk about the United States. A lot of question about policy, perhaps coming a little bit clearer as Joe Biden names a slew of longtime economic professionals to his Economic Council and Advisory Board. Joining us now, Bloomberg's chief Washington correspondent, Kevin Cirilli. Can you talk a little bit about the fight ahead and the one member of the team so far appointed that does look like it may be a battle to get through Congress?
Yeah, Neera Tanden, and look, she is head of the Center for American Progress and really was one of the architects of the Affordable Care Act. And progressives that I speak with are cautiously noting that Republicans likely are going to be deeply skeptical. In fact, several Republicans came out yesterday and said that that nomination is dead on arrival. Now, that said, Democrats are also ready for there to be a fight, so to speak, especially as it relates to getting these confirmations through. Now, all of this really will come down the math to the January 5th runoff elections in Georgia to see whether or not Republicans are able to expand some of their gains in the Senate. So without question, in addition to Neera Tanden, of course, she's nominated to be the director of the Office of Management and Budget. Cecilia Rouse and Janet Yellen, as of now, look to have a little bit more of a clear path to their nomination. So
David Riley of Blue Bay Asset Management came on earlier and was talking about how, in general, household balance sheets in the United States are doing pretty well. The problem is when you look under the hood and you see the disparities that seem to be growing between lower income households and higher income households. Do we have a sense of how Joe Biden plans to address that, given some of the political pushback he may get from a Republican-led Senate?
2 words, fiscal stimulus. And he's going to have to specifically target the likes of Senator Susan Collins and some other centrist, more moderate Republicans, because those Republicans really are going to be where he can pick up votes in order to get a massive fiscal stimulus package over the finish line. I was struck by the comments of Fed Chairman Jay Powell yesterday, and really he is echoing the likely to be Treasury Secretary Janet Yellen, who has also been urging for there to be more fiscal stimulus. But there is a significant portion of Republicans, especially in the Senate, who feel that more fiscal stimulus, even more targeted fiscal stimulus, is going to be an uphill battle. But in the first 100 days, in the first couple of months in office, we'll have a very clear indication of just how much Democrats and Republicans and Joe Biden's, President-elect Joe Biden's new Washington are going to be able to work together.
Kevin, how's the Senate race for Georgia going?
Well, President Trump is going to head down there and campaign. And so there's going to be a lot of fiery optics around the Georgia runoff election. And Senate Majority Leader Mitch McConnell, as well as President Trump, are aligned in the sense that they want to have a Republican-controlled Senate. President Trump wants to leave office with a win. Even though he lost the presidential election, it would help him in his short-term political ambitions, based upon the reporting that I'm doing from his perception, if he was able to deliver some wins in Georgia as Washington and Republican Party reassesses for 2022 and down the line to 2024.
Kevin, what's the the theme of the week? Is it going to be more presidential pardons, or what are you hearing on the ground?
You know, in terms of where things go from the White House, I think it's really all about, in Washington, D.C. speak, is are we going to have a government shutdown next week on December 11th? And many of the sources that I'm talking with are very much in the immediacy of the next 2 weeks, focusing on December 11th as a deadline to pass a continuing resolution. That could inject a lot of volatility. It could also really foreshadow some of the contours of the discussions in the first 100 days of President-elect Biden's administration. And that's really on the minds, I think, of the most pressing matter here in Washington.
Kevin, what is Trump doing all day?
Well, honestly, I think, I mean, making a lot of calls and is fired up on Georgia. There's some, Iran is still bubbling over. So look, I mean, I hear your point, but there are still daily matters for the commander-in-chief to attend to. And Iran is a lot of the foreign policy circles in Washington right now on hyper alert and hyper focus on both sides.
Kevin Cirilli diplomatically responded. Bloomberg Chief Washington correspondent. Good luck with the Eagles. I hope that next time, maybe if you stay awake the whole game, you'll actually see a victory.
It was so depressing. It was so depressing, but we'll leave it there.
All right, we'll leave it there. Thank you so much, Kevin Cirilli. Coming up on the simulcast, Lawrence Boone, OECD Chief Economist. That's at 7:30 a.m. in New York, 12:30 p.m. in London. From New York and London, this is Bloomberg.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe. Bloomberg Surveillance. I'm from Lackman, London. Lisa Abramovitz in New York. Now, joining us to talk about the markets, Jim Caron, Morgan Stanley Investment Management Fixed Income Portfolio Manager. Jim, great to have you on the program. I saw a couple of notes from banks this morning that were pretty bullish about growth in 2021 once we have the vaccine. A deep and broad pickup is what, for example, Goldman Sachs is expecting to see. Is that in line with what you're expecting, or are you much more cautious, like maybe the view of central banks?
No, it is in line with what I'm thinking, but I think what that narrative misses is, will the growth be enough to close the output gap? So yes, next year should be a better year than 2020 for sure, and we expect there to be positive growth in the 5%, maybe even possibly as high as 6% range for next year. But the thing is that even if we do deliver that type of growth, we're still running below potential. So remember that we're supposed to be growing in the U.S. at about 2% per year. This year, we may grow at -3 or -4%. So that means we're missing by somewhere around 5 or 6% growth off of trend line. So if we go back up 5%, say next year, we're still below the trend line, and we still have an output gap, which means that excesses are continuing to build in the economy, which puts downward pressure on interest rates, or at least keeps rates low. I think rates will rise in 2021, but they won't rise aggressively because of this. And inflation expectations, continue to, stay relatively tame, despite the amount of monetary stimulus, despite the amount of potential fiscal stimulus as well. So it's not a question of will there be growth? It's more of a question of will there be enough growth, not just in 2021, but also going into 2022 to close that output gap and to really get aggregate demand back into the economy such that we're back on trend.
So, Jim, what does that mean for U.S. Treasuries?
So, what it probably means is that in the beginning stages, fourth quarter and first quarter GDP, there may be some downward revisions just due to the pandemic and some of the economic fallout from that. But effectively, what that means is that as we start to move into the second quarter and third quarter, we would expect to make up some lost growth. So I think what the markets are trying to do is look through that. So one of the questions that gets asked is if the economy is so good, why are 10-year Treasury yields so low? And why aren't they reflecting something better? And I think part of the reason is these downward revisions in GDP in the first quarter and also currently in the fourth quarter. So what that's doing is it's saying that 10-year yields can probably drift higher, probably get up towards 1.25%, maybe even as high as 1.5% next year. I think the direction of travel will be higher, but I think we have to wait until we start to peak in terms of the virus count and we start to know a little bit more about not just the vaccine, but also its distribution. At that point, I think yields are going to start to rise. But until that happens, I think that we're probably going to be stuck below 1% for the rest of the year and maybe even into the start of next year.
So, Jim, what I'm hearing from you is that the reason why yields are low is because of fundamentals, not because the Fed necessarily is going to increase its bond purchases on the longer end of the yield curve. Is that correct?
Yeah, that's correct. Certainly the Fed has, that may have something to do with it as well, but I think it's more at the margin. But I do think it's about the fundamentals.
So is there some kind of inconsistency here with the fundamentals leading to bond yields, at least for the U.S. government, to be so low, and the incredibly low premium that people are demanding to own riskier credit? The idea that investors are betting that companies will not default, while at the same time not seeing growth that does anything impressive in the near term.
Yeah, so that's a great question, right? So this is what it really comes down to. It comes down to financial conditions. So when we see low rates today, typically what that means is, maybe something in the future might not be working as well, and we should be somewhat cautious. But actually the low rates today, because we're going to have, and this is the absolute key point, because we're going to have pro-cyclical fiscal and monetary policy. And what that means is that we're going to have easier policy from the monetary side. The Fed may extend the maturity of their purchases. We may have fiscal stimulus at a time when economic growth is supposed to rebound very, very strong. So typically, if I were to normally say growth is going to be 4% next year or 5%, you would normally say, well, interest rates may rise and the Fed may hike rates at some point. That's not going to be the case. So the reason why credit, default risk, riskier assets like equities are doing well is because these low rates today are actually telling us that this is emblematic of pro-cyclical policy, both on the fiscal side and the monetary side. It's policy that's going to reinforce the cycle, this recovery cycle and growth, and it's not going to get in the way. So that's why when you look at credit spreads, and you bring that up, and I think that's a great point, investment grade credit spreads are tightening quite dramatically, and so are high yield spreads as well. And they may even tighten beyond what people expect them to do, even somewhat historically. So we would expect that to happen in 2021 in the period of pro-cyclical policy. That's really the key.
Jim, what will Janet Yellen, as Treasury Secretary, actually, what does it mean for the markets?
So I think it means a couple of things. First of all, I think it's, you couldn't ask for a better pick, in my opinion, because understands the Fed. She's very pragmatic. She's written a whole bunch of white papers, which I've read, and I think she's absolutely brilliant. But what it does is that typically, we're in this point right now where monetary policy, is Fed funds rate is zero, right? And it's effectively zero. It's really, really low. So the only way to get stimulus is to cooperate with the fiscal side. The fiscal component is going to really be run through the Treasury. So having somebody who understands the Fed, understands financial conditions, understands how to work with the Fed and how the Fed actually works, in someone like Janet Yellen, when the federal government is going to work with the Fed, they need a good liaison to do that, and not a political person, but somebody who absolutely understands what they're doing with the Fed. And I think Janet Yellen represents that. And also remember, and this might be an outside view, but the Treasury Secretary also is someone who talks about the dollar. And every Treasury Secretary says, well, we have a strong dollar policy. Well, a weaker dollar, which is what we're seeing right now, is actually very beneficial to the U.S. to the extent that it helps ease financial conditions. And I think that Janet Yellen will have some very interesting interplay with the Fed. And this is going to be a very interesting period of time, because this is a point in time where the federal government fiscal stimulus has to merge with monetary stimulus, given how, we're already at the zero lower bound for interest rates. So you need the federal government and the Federal Reserve to start working together. And I think we've got a great liaison in Janet Yellen.
How will she work with Mitch McConnell? How much can she actually get in stimulus?
Well, that's where it gets into politics, right? I think what Janet Yellen is going to be very, very good at doing is laying out the argument. Here's what needs to be done. And I think that when she lays out an argument, there'll probably be a lot of economic buy-in from that, and a lot of economic support. It'll be respected, in other words. It won't just be, here's a Treasury Secretary who's a political actor and they're just trying to do a few things. I think that the way that she would approach it is the way that she approached her, chairwomanship at the Fed, which is to lay out a very strong political argument, explain why she needs to do what she needs to do and what the effects may be going forward. Clearly, it's a political appointment, so I think there's going to be some partisanship there. But I don't think that's going to get in the way of the intellectual capital that she brings in terms of how she presents the ideas. And I think that's what's different about her.
Thank you so much, Jim Caron there, Morgan Stanley Investment Management. He, of course, stays with us. Now, coming up on Bloomberg Technology, Carla Harris, Morgan Stanley Vice Chair of Wealth Management. You don't want to miss that interview, 10:30 p.m. in London, 5:30 p.m. in New York. And this is Bloomberg.
So the reason we're interested in Post Office Rock is just the extreme nature of the erosion that is ongoing here. In the last, since 1940, it's eroded about 100 meters and in quite a unique fashion. By having a map of the seafloor and hopefully being able to capture some movement in these transverse dunes, we'll be able to see after the erosion where the sand is going and why it is not replenishing the coast as sometimes and most often happens.
with continued sea level rise and future climate change, we're just going to see much more of this kind of event taking place. So it's a good proxy of what we expect to take place much more commonly by 2050, 2100 than is currently the case.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Credit Suisse is proposing that its next chairman be the outgoing CEO of Lloyd's banking group, Antonio Orta Osorio. Shareholders will vote on the nomination in April. Orta Osorio steered Lloyd's to profitability and full private ownership after the financial crisis. Credit Suisse is trying to reverse a run of low profits. Debenhams says its UK stores will close unless it finds a buyer. The chain's administrators haven't found one so far. Debenhams' 124 stores and online operations will stay open whilst they sell their remaining goods. About 12,000 employees could lose their jobs. And Tesla will be added to the S&P 500 in one shot on December the 21st. That's a move that will ripple through the entire market. Money managers will have to adjust their portfolios to make room for a company worth $538 billion. S&P had considered adding Tesla in two parts because of its size. It will be the 7th largest company in the index. And that is your latest Bloomberg Business Flash. Francine, Lisa.
Thank you so much, Ritika. Now, we're just getting some breaking news out of Credit Suisse. Of course, this morning we had news on a possible chairman for Credit Suisse, but now we also find out that Credit Suisse is warning on a $380 million hit in the fourth quarter from a New York mortgage case. Now, I have to say, the Swiss bank did caution earlier on that it may also exhaust its legal provisions in this long-running U.S. court dispute. It is the second hefty write-down this quarter for Credit Suisse, and again, this is also RMBS. It's basically the residential mortgage-backed securities. We've been talking about it's a legal battle that has been ongoing since 2009. So we'll have plenty more, of course, on that. I don't know whether it's having an impact on Credit Suisse. I mean, just barely. It's still getting some 0.7% because it's been going on for quite some time. But $680 million is still not nothing in this RMBS case. Otherwise, the market's still getting a lift for December, Lisa. And of course, we focus on the banks coming up also as Bloomberg's Sustainable Business Conference. We'll be talking to Ned Segal, the Twitter Chief Financial Officer.
the pandemic swells the gap between the rich and poor around the world, there may be no starker case of inequality than Venezuela, where the socialist leader Nicolás Maduro has kept his hold on power by fostering a Darwinian dollarization under quarantine. The nation's mighty oil industry has collapsed. Water, electricity, and gasoline are barely available, and hunger hunts vast portions of the population. 4 out of 5 Venezuelans can't afford a basic food basket last year, according to a research by the main universities. Meanwhile, Caracas neighborhoods have a dozen new delivery services bringing to their doors everything from truffle salmon poke bowls to electronic cigarettes and $50 gluten-free birthday cakes.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I desperately believe that we need more stimulus, and we need more stimulus today. I would beg Congress to go back to work and pass a stimulus bill this week. There's no time like the present. Dollars put back in consumers' pockets would be very, very important.
That was former National Economics Council Director Gary Cohn, now co-founder of Robbins Holdings, speaking with Bloomberg Television yesterday. A big question is, how important is it to get fiscal support in the very near term, given some of the savings that we see, in aggregate at least, on U.S. household balance sheets? Still with us, Jim Caron, Morgan Stanley Investment Management Fixed Income Portfolio Manager. Jim, we touched on this earlier, but I want to build out just what the downside surprise could be if there isn't some sort of fiscal package in the near term. What's sort of the baseline assumption baked into market valuations currently for when we will get an additional fiscal support plan in the United States?
Well, the support plan probably won't happen until early in the new Biden administration. It doesn't seem like there's anything that's going to happen in December, although we could be surprised. Now, if we want to put some numbers to it, there's about $125 billion worth of money that's been going to individuals through payroll protection programs and through all different types of support facilities that comes to an end on December 31st. So what's happening in the markets today is that we're worried about a fiscal cliff. And what I was saying earlier was that there are downward revisions to first quarter growth now all of a sudden. Well, part of that is because of the fiscal cliff, and if you don't get that stimulus, then that means that even though 2021 is supposed to be a good year, you may start off in a deep hole. So if you don't get the fiscal stimulus. Sorry, go ahead.
No, starting off in a deep hole, this is a really important point, especially as a lot of people overlook the potential scarring in the near term with the virus numbers ticking up, and they say, well, once we get a vaccine, it will be okay. Will it be okay if we get a vaccine but we don't get fiscal support?
I think you need both. I think you really need both because, quite honestly, from what I understand, the vaccine rollout, may be, more in the second half of the year as opposed to the first half of the year. So, see, the issue is credit impairment. So if individuals aren't getting a paycheck and can't pay their credit cards, can't pay their auto loans, they go into some type of deficiency status effectively, which makes it harder for them to get credit when times get good. And here we are. We've done all this good work throughout 2020, And to have a misstep right at the end of this, right when we have a vaccine, right at the start of the new year, we really need to get through the first quarter with reasonable economic health. And if we do, then that means the second and third quarters really can launch from a higher platform. So I was talking about a deep hole. So consumption is about 70% of GDP. Right now, people are consuming out of savings. The personal savings rate has gone higher. So what many may say is, well, wait a minute, a lot of this fiscal stimulus has already ended. It's not really being used yet. The numbers are still relatively good. And the reason that is because with all the fiscal stimulus that we got earlier in the year, people saved their money. And the savings rate was very, very high. So really now what we're asking people to do without stimulus is spend down their savings in order to just have reasonable consumption in the first quarter. And they will. But the point is that means when the stimulus does come, they're not going to spend it, which is what you want. They're going to save it again. So that's the problem that we're juggling right now.
Jim, when you look at, what it means longer term, have we at least gotten rid of the specter of deflation? Or is it still something that could come back to haunt us?
It's absolutely still something that can come back to haunt us, right? So I think the narrative in the market, I sort of disagree with it. And the narrative is 2021 is going to be good. We're going to build up inflationary pressures and all is going to be fine. Don't worry about deflation or disinflation. And I think I can embrace that. However, I think the narrative should be we're more on a razor's edge here. And the issue is what I was talking about earlier in the show. It's really about, is the growth going to be good enough to close the output gap? Because if you don't close the output gap, even though we have a decent 2021, if it's not good enough to close the gap, then that means disinflationary pressures are still building. So even if we have a year next year where we grow 5 or 6%, that still doesn't mean that inflation pressures are going to be building because we haven't closed the output gap. We need to actually, move above trend growth to really burn off all those excesses and then put upward pressure on prices. And at that point, we can say the specter of deflation or disinflation has gone away, but not until then. So that's why it's more of a razor's edge argument as opposed to just a liftoff argument in 2021.
So, Jim, when could that stabilize? Is it after, 10 months after liftoff? Could it take longer? And again, we're trying to figure out some of these, unintended consequences or what gets pushed back into 21, such as, bankruptcies and defaults.
Sure. So what I would look at is I think there's a couple of things. I mean, as far as inflation expectations starting to move higher, I don't think that, we really get material inflation moving higher until probably 2023. So it's going to take 2021, 2022, close the output gap, restore aggregate demand above trend growth. Then we'll start to get the inflation. I think that's going to take a couple of years. Now, in terms of default risk and things of that nature, that's really going to be a function of economic growth and cash flow. So this aggregate demand coming back and cash flow, therefore, coming back into the market. And that's where the Fed can help in terms of keeping interest rates still relatively low through their quantitative easing programs. So that gets back to, what I was saying about pro-cyclical policy, meaning that typically as the economy gets stronger, interest rates rise, the cost of credit goes up. Now, imagine if the policy then is that as the economy gets stronger, but we keep interest rates still very low and the cost of credit still very, very low, and that means that default risks probably stay low as well. So the whole point is to postpone that as much as possible until we get the output gap closed and we have higher aggregate demand and cash flows get restored to businesses.
Jim Karen, before we let you go, still having turkey for lunch?
Yes, I am. My favorite is turkey sandwich with the stuffing and the cranberry sauce, and just toast it and eat it.
All right. Bloomberg Surveillance, also known as the Cooking Channel. Jim Karen, Morgan Stanley Investment Management Fixed Income Portfolio Manager. Thank you so much, as always, for your insights. Right now, let's get to the Bloomberg First Word News. Here's Ritika Gupta.
Thanks, Lisa. Joe Biden is setting up his first confirmation fight by naming Neera Tanden to be his budget chief. Tanden's nomination drew swift objections from Republican senators who will vote on her. Texas Senator John Cornyn called her selection radioactive. Tanden is a longtime Democratic operative who has frequently criticized Republicans on Twitter. Senate Majority Leader Mitch McConnell has set up a vote to advance the nomination of Christopher Waller to the Federal Reserve Board. Waller is research director at the St. Louis Fed, but McConnell has taken no action to open Judy Shelton's path to the Fed. That dims the chances for the controversial nominee. Her confirmation was blocked before the Thanksgiving break. White House coronavirus advisor Scott Atlas is resigning. Atlas won President Trump's favor by advocating a loosening of social distancing restrictions, but he was criticized by other members of the White House panel for describing lockdowns as harmful to Americans. Atlas is a neurologist with no background in public health or infectious diseases. ExxonMobil is about to face the biggest write-down in its modern history. Exxon says it will write down the value of North and South American natural gas fields by $17 to $20 billion. Meanwhile, the company will drastically reduce capital spending through 2025. Exxon has been hammered by the collapse in oil prices, a global supply glut, and the pandemic-driven crash in fuel sales. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg. Francine.
Ritika, thank you so much. Now, coming up on Bloomberg Radio and part of Bloomberg's Sustainability Business Summit, a conversation with the president of the Rockefeller Foundation, Dr. Rajiv Shah. That's coming up later. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Bloomberg Surveillance. I'm Francine Lacqua here in London. Lisa Abramovitz in New York. Now, when Tesla is added to the S&P later today, it will happen all at once. Now, the S&P Dow Jones indices announced the decision late yesterday. It had previously considered adding Tesla in two parts, given its massive size. I'm actually not sure if it's today or certainly it's in December. Joining us to discuss all of this is Bloomberg's Danny Berger. Danny, apart from timing, and good morning to you, which I'll ask about you in a second, but what's behind the S&P decision to add the shares all in one go.
Yeah, Francine, so this is going to happen, as you say, all in one go on December 21st. So S&P Dow Jones announced this decision late yesterday, and this comes after a month of speaking with investors, market participants, and getting their feedback. So we'd have to imagine that there's an overall sense of confidence that they can add Tesla, which is going to be the biggest company ever added to the S&P 500, that they can do it somewhat seamlessly, that this won't be too disruptive. But look, it certainly has the chance to. It'll be the 7th biggest company in the S&P 500. But S&P Dow Jones, when they put this announcement out yesterday, they say, look, the liquidity is there, both in terms of Tesla and the greater market, to facilitate what they call an orderly rebalance. And as one strategist told Bloomberg, I love this, it's like ripping the Band-Aid off. You get it all done in one go. After all, doing it in two parts would have been unprecedented, and perhaps that's a risky move for an unprecedented size that Tesla is.
Danny, there's also a question about the incredible volatility in Tesla shares. I mean, the volatility has been in one direction this year, but we could see a gain or a decline of 10% easily here. How much volatility does this introduce to the broader index that's used as the benchmark for so much money? How much is it? How many trillions of dollars?
It's $11 trillion, Lisa. So if you're one of these managers who manages these passive funds, that's a lot of stock you have to offload in order to squeeze Tesla in there. Vanguard actually looked at this when Tesla was half the size it currently is, and it said that as much as $40 billion worth of stock could be dumped. And you'd have to imagine it's maybe double that now. And look, when it gets rebalanced, these are the figures that S&P Dow Jones indices have estimated. $72.7 billion worth of shares are going to need to trade hands. An average rebalancing event is less than half of that. And the most there's ever been, the record prior to what this is expected to be, was $50 billion. So that in itself could whip up volume, perhaps increased volatility as well. And again, the real risk for a lot of managers who are tracking this, that in doing so, you get really wide tracking error. In other words, what your portfolio looks like doesn't match the S&P 500. That's certainly what investors are hoping to mitigate, but it seems that they're confident, again, that they can do that in one go.
Danny, what exactly is Tesla? Is it, we ask this every couple of weeks. Is it a car company? Is it a tech company? Is it a climate change play?
Well, if we're just going to look at how it trades, it certainly trades like one of the big FANG stocks. So in that way, it certainly gives this idea of more of a tech sort of company. And I think that is one element that some investors are concerned about when it comes to the addition of the S&P 500. All of a sudden, because you have this mega cap stock getting put into the S&P 500, it has a very heavy weighting, as we've been discussing. All of a sudden, your S&P 500 passive portfolio looks a whole lot more like a big cap NASDAQ 100 type investment. So this does change the profile of what these passive funds are going to look like. And part of that comes down, Francine, as you so rightly point out, is this sort of blended nature of Tesla between, electric vehicle company and tech company as well.
Danny, thank you so much. Our Danny Berger there with the very latest on Tesla. Now, up next, we continue tracking COVID-19 with Amish Adalja, Johns Hopkins Center for Health Security Senior Scholar. We'll talk about vaccines, we'll talk about treatment, and we'll talk about how the hospitals are coping. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London, Lisa Abramovitz in New York. Now, the Belgian health minister, Frank van den Broeke, says Belgium's hospital system was close to collapsing in the second wave. Now, he spoke with Bloomberg's Maria Tadeo about the nation's access to vaccines and lockdowns at the virtual European Health Summit in Brussels.
Our hospital system was close to collapsing. So we took rather tough measures, and that brought down the numbers, so our situation is better now. The numbers are decreasing. However, there's one hard lesson we learned after the first wave, that is, one should be very careful before even talking about an exit strategy. One should be very careful with measures that loosen the measures taken. And so we are very, very cautiously approaching Christmas time. We just decided to reopen non-essential shops, but we keep the number of contacts very limited, and we will not create any additional flexibility at Christmas or New Year's Eve, except the fact that we say that people who are single can invite two persons at Christmas. This is tough, this is sad for many people, but we think it's absolutely necessary because we absolutely want to avoid a third wave. That would be a complete catastrophe.
Minister, just as a final question, I want to ask you about the vaccines. Which one do you think Belgium is going to get first? I know there's a number of contracts. When do you think you're going to get it? And how many people can you vaccinate quickly?
I don't like easy promises. We are preparing a vaccination campaign, so we completely participated in the EU scheme, which I think is extremely helpful. It's the fact that we have this joint procurement of vaccines is extremely important for us. It's extremely helpful. So we've been signing in for all the contracts, AstraZeneca, Johnson & Johnson, Pfizer, and the others. So we are signing in, which means that in terms of quantity, there will not be a problem. But we do know that first there must be an authorization by the European Medicament Agency. So we need that.
Secondly, but it's happening soon, right? It will happen soon, we're expecting.
Yes, but as a Minister of Health, I have to speak always with two words, as we say in Dutch. So I must be cautious. So first there must be the authorization, then we have to receive the production. I'm hopeful, I'm optimistic on that, and we are preparing the campaign. But we know that the first lots will be in the hundreds of thousands, not in the millions. And so it will take time, and we'll have to explain to the population that this takes time.
Well, that was Bloomberg's Maria Tadeo speaking with the Belgian Health Minister, Frank van den Broeke, at the virtual European Health Summit in Brussels. Now, joining us to talk about vaccines, to talk about the latest news about applications with regulators is Dr. Amish Adalja. He is Johns Hopkins Center for Health Security Senior Scholar. Doctor, thanks so much for joining us. I mean, there are a number of vaccines that will now have asked for regulatory approval in Europe. We're expecting them to do so soon in the U.S. Is the biggest challenge regulators saying yes, or is the biggest challenge challenge around logistics to get enough people vaccinated quickly when the approval comes?
To me, I think it has to be logistics, because we know already, looking at the phase 3 data, that everything does appear to be good in terms of safety, in terms of efficacy, a much higher efficacy than we ever expected with these first generation vaccines. So now the question is really just getting the approval, which most people think is going to be forthcoming in a matter of weeks, and then the scale up of production, and then getting this vaccine into the arms of people all around the world, turning it into a vaccination. And I think that's going to be one of the biggest public health challenges we've ever faced.
So what's the right way of thinking about this? I know that there's a number of avenues, either getting pharmacies to administer some of the vaccine shots, even possibly drafting in firemen and things like that. How would you approach this?
It really has to be all hands on deck when we're vaccinating this level of the population. Initially, it's going to be kind of a trickle, healthcare workers, high-risk individuals, and that might be manageable with existing resources. But when we're talking about vaccinating the entire world's population of adults, it's going to be something you're going to need non-traditional vaccinators. It's not always going to be doctors and nurses. You have to think about pharmacists. You may have to think about first responders, EMTs, paramedics. We need as many people that are able to vaccinate to be able to vaccinate. This happened during H1N1 during the pandemic, where we started to have other people vaccinate as well. That didn't really have a huge uptick in the United States or uptake of the vaccine in the United States, but we did use other people to vaccinate. So we have to really think about everybody putting forward, a plan that gets as much vaccine as quickly as possible into the arms of the world's population, and really have to be much better than we are with normal vaccines.
Will people want the vaccine, and will people want a certain type of vaccine? Will they be given a choice, whether it's one of the new ones, the mRNA, or one of the older style ones?
I suspect most people are going to get the vaccine that's available to them. I know that I surely am going to get whatever. If both Pfizer and Moderna are available, I'm going to get the one that's available to me first. I'm not going to make much of a qualm between which one I get. And I think that's going to be the way that most countries will do this. They may have contracts with one, or if there are more than one, it's going to be logistically what's available in their local area. And I do think people will want it. It's just we have to really be good at detailing the risks and benefits. I know that I want it, and I know that I want to be first. I'll be first in line if I'm offered that position when my hospital starts to vaccinate.
Amish, do we know that, once you're vaccinated, could you still catch the disease and pass it on to someone else?
That's an open question. We don't know if these vaccines provide sterilizing immunity. I suspect that will be in the manuscripts that are published in medical journals eventually with these vaccines. But it's clear that these vaccines prevent not only severe disease, which we thought they would for sure, but they also prevent symptomatic disease. So even a mild case can be prevented by these vaccines. We don't know, though, if asymptomatic infections or contagiousness are prevented. We know that it likely attenuates it or decreases it, but we don't know how much of that happens, and that's another open question we really want to see the data on.
What's it like working in a hospital right now?
It's not very fun, I would say it that way. It's very busy. I work in a hospitals in the Pittsburgh area, and we're definitely seeing the highest number of COVID patients that we have ever seen. And it becomes very hard to be able to move patients because there just are not beds available fast in terms of ICU beds, in terms of beds with monitored beds. All of that's really kind of slowing things down. It's not that we're at capacity. It's just that right now we're close enough to capacity that everything really moves kind of like molasses. Everything is very slow, and we continue to get more and more patients with COVID-19 that are now requiring hospitalization, that have been sick for 5 or 6 days. And I don't know how long this is sustainable before you actually break the system. It is something that I think is going to be challenging, and we're almost on a day-to-day basis of not knowing how it's going to go.
Amish, thank you so much. Amish Adalja there of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg for the latest information. You can also tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. Now, this is the mood on the markets. Global stocks and U.S. futures starting December on a bullish note. That's certainly after the rebound that we saw after yesterday's retreat. The risk-on mood carrying across a lot of markets, actually. Bitcoin approaching $20,000, dollar weakening against most of its major peers. I'm also looking at gold. This is Bloomberg.
forma que esses governantes dirigem esse país pensando só naqueles que já têm muito e já têm demais. E é mais uma vez por isso que a gente optou por ocupar esses espaços, para que a gente lá de dentro possa exercer a mesma pressão que a gente já exerce na rua de fora para dentro. A gente quer abalar essa estrutura.
Eu tenho muita esperança, tenho muita fé em Deus que aqui a gente ainda vamos conseguir a nossa moradia digna, a nossa casinha para, ao menos nos últimos dias de vida, se vender numa casa.
Never met, obviously, Walt Disney, but if you had a chance to talk to him, what would you want to ask?
Obviously, probably the number one question would be, how am I doing?
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
The resurgence of the disease certainly promises nothing good for the U.S. economy.
The continued weakness of the labor market is something that is going to drag the whole economy down.
We're still in a deep recession.
There's pent-up demand for, for getting out of the house.
It's time to get in big and spend big.
Whatever the damage is done over the next few months, entrepreneurial America will come back.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York and London, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Lisa Abramowitz, I'm Jonathan Farrow. Tom Keene will be back with us tomorrow after a record-breaking month in the equity market in many places worldwide. This market, Lisa Abramowitz, adding a little bit more weight to that monthly gain last month. This December, we're at 1% on S&P 500 futures.
If people thought that there would be a dip to buy, perhaps they should think again. And that's actually the tenor of a lot of the notes that I've seen coming out of the big houses, that even though the gains have been so big up until now, it doesn't mean you should sort of bow out and not get in on the game. But I do wonder, John, especially if we don't get a fiscal support package, especially if we do get increased deterioration in some of the economic data, I do wonder if we're going to see a change in sentiment.
Well, Lisa, what if we get more restrictions? Look at California. The governor, Mr. Newsom, had this to say yesterday. If these trends continue, we're going to have to take much more dramatic, arguably drastic action. Now, if he's implying they might have to have a shelter-in-place order again, like we saw back in spring, or at least a flavour, a version of that, how do we get through that if we don't have the fiscal hand down from D.C.? That's the big question going into December and going into early 21.
Yeah, and the amazing thing, though, is that markets have really shrugged this off completely, even as we see a deterioration in some of the high-frequency data. That said, if you want to take a look at the V-shaped recovery, check out manufacturing, which brings us to what we're looking at today. U.S. manufacturing data, construction, and auto sales all coming out. Manufacturing is fascinating to me because it really highlights the V-shaped recovery. I mean, just bam, bam, look at that. Just a huge recovery as people start to buy stuff, and especially with cars and other durable goods. 10 a.m., Jay Powell, Stephen Mnuchin, hand in hand after their public tiff. They're going to be testifying to the Senate Banking Committee, really to talk about the point that you raised, John, which is fiscal support, how it's needed. Expect them to talk about that. I am particularly curious about how Stephen Mnuchin nuances his move to withdraw some of the cash that was left over from some of the programs that had been previously allocated to the Federal Reserve. Also today, President-elect Joe Biden and Vice President-elect Harris are introducing some key economic policy nominees and appointees in Wilmington, Delaware. Interesting to see the controversy that's building around some of them as Joe Biden tries to sort of hint at a more progressive type of strategy and platform, even though he's going to get a lot of pushback from a Republican Senate.
That's the lineup for today, then. It's a busy one. Looking forward to hearing from Chairman Powell and Secretary Mnuchin. Here's the price action this Tuesday morning. Good morning to you all. Equity futures up 37 on the S&P 500. For the United States, I think the best month since April. On the S&P, for the Nasdaq, the best month since August. The Russell, the best month ever. In Europe, the Stock 600, the best month ever. Italy, best ever. Spain, best ever. DAX, best since 09. CAC 40 in Paris, best since 88. You get the picture. Euro dollar 119.68, just short of 120 right now, up by about 1/3 of 1% on the single currency. The single currency getting through 120 intraday yesterday, just short of the year-to-date high on a single currency in yesterday's session, but we couldn't hold that level. Back to 119.67. Actually very interesting to hear from an ECB executive board member a little bit earlier on this morning in an interview with our team at Bloomberg News. She had to say the following: it is appropriate to focus on preserving these conditions rather than easing much further. If it's necessary to do something that doesn't meet market expectations, we have to do that nevertheless. That was the ECB's Mrs. Schnabel. And Lisa, I think this really poses an interesting question for the ECB meeting. Are they trying to push back here against expectations and get people to focus on the duration of their assistance and not necessarily the size of it in the coming week?
You know, I thought this was fascinating as well, especially because we got disappointing inflation data out of the euro area today, and there's a question of how effective their policy has been. Sort of to your point, the idea of just broadening how much they buy, they're reaching the limits. I mean, what's next? Equities?
Hey, Lisa, I don't want to rule it out at some point in the next 10, 15 years. I remember when we used to debate here in London about 8 years ago whether they'd start buying corporate debt, whether they would take rates negative. They took rates negative in 2014, and shortly thereafter, they started buying corporate debt and everything else. We've gone through a lot in Europe, and I don't want to rule out anything because who knows what the future holds. Lisa, think about it. We're at negative 50 basis points right now at the depot rate of the ECB. Let's say we have some trouble in a few more years. What's next? It's the only thing that is left. Japan's already doing it.
I mean, ETFs, they own, what, 60% of the entire ETF market, the Bank of Japan. The question is, again, when do we reach diminishing returns? Many people would argue we're already doing that, and you're creating a very perverse incentive, saying to investors, no matter what happens, central banks will have your back to boost asset prices, if not necessarily improve the underlying economy.
Let's bring in Troy Gayeski, shall we? Skybridge Capital Co-CIO. Troy, just help us reflect on the month that was and how we reset for the month to come.
Yes. So look, you came into this month, there's quite a few rotations, right? You came in where markets were pricing in a blue wave, and then you got less than a blue wave. Obviously, you had a Biden victory, but certainly not a Senate flipping at least yet, and seats lost in the House. So that caused some of the cyclical names to sell off a bit and tech to rally back. And then, of course, we had the fantastic news, which can't be understated enough, about how effective these vaccines are and what that means in terms of light at the end of the tunnel. So you put that all together, going in where you had a VIX around 40 at the end of October and a lot of risk-off price action, and you had an extremely explosive month really across the board for all assets, whether it was credit, cyclicals, value. Really the only names that performed poorly were some of the stay-at-home names that had done so well for the rest of earlier in the year. So, as we look forward, clearly we're starting at 23 times forward earnings again, just like we were at the beginning of September. Even after this massive rally, equities are only up 3.5 to 4 the last 3 months. We all know that gains are going to be much harder to come by in equity markets or all assets in general. But it is unlikely, unless we get that double dip, which at least from the data we're looking at, doesn't look like it's coming just yet, that we have a major dislocation prior to the Biden administration being sworn in and hopefully getting, $500 billion or more in fiscal stimulus.
What's the data that you're looking at, Troy?
Yeah, so look, I think if you think of the stimulus that's still in the system, there's $2.5 trillion more in commercial bank deposit accounts than there was coming into this year, for instance. You look at the housing market, it's on fire. Mortgage debt service is the lowest it's been in over 40 years. You look at the over $100 billion of debt that's been paid down by the consumer. You look at the fact that wages and salaries have now gone above where they were coming into the pandemic. Now, offsetting that, of course, is that transfer payments have dropped from fiscal stimulus going down. So you look across the board, and what you see is that there's an enormous amount of stimulus that has yet to be spent. Okay, and that's what's supporting consumption now, even as enhanced unemployment drops off. At the same time, we have created 10 million jobs or recaptured 10 million plus jobs since the downturn. So there is the ability to consume. To your point on manufacturing, you've seen CapEx pick up meaningfully. Obviously, you've seen fiscal spending from the federal government pick up meaningfully. Trade is not a net contributor, but those three cylinders are hitting strong enough, we think, to keep us out of a recession, provided, right, that we do get another round of at least McConnell-style stimulus sometime in February or March. If we don't get
McConnell-style being
right?
500 billion, Troy? Is McConnell
exactly.
500 billion? Is that what you assume it is?
Yeah, and it's unfortunate to joke around about these things because there's real, pain out there in the lower wage earners. But somewhere between $500 billion was McConnell style, right? And Pelosi was 2.5. One would think that Biden and McConnell worked together very well over time. Remember, they worked together as Boehner, McConnell, and Biden that really struck out the Obama administration's deal in 2011. That $500 billion is still 2.5% of GDP. We were about 3.5% below peak GDP at the end of Q3, a remarkable number. Looks like we'll probably be around 2% below peak GDP at the end of this year. So 2.5% GDP is really all we need to get back to the peak level by the end of Q2 at the latest.
So let me stress test the confidence just a little bit, Troy. This came from Vice President Mike Pence. He said, we strongly believe the vaccine distribution process could begin the week of December 14th. That was reportedly Mike Pence speaking to governors in the last 24 hours. Then we heard from Governor Newsom, who had this to say, and I said it at the top of the hour, if these trends continue, we're going to have to take much more dramatic, arguably drastic action. How do you think this market would process some form of shelter-in-place order from Governor Newsom, something much more stricter than what we've seen already in the next couple of weeks?
Yes, so that would certainly cause a short-term pullback. Nothing meaningful, maybe 1%, 2%, 3%, right? And again, it's back to starting level, right? Think of the starting level markets now. VIX around 20, right? Which has been the post-crisis, post-vaccine post-pandemic crisis low. We got up to 40 at the end of October, collapsed back down. Multiples at 23x, and more good news looking forward than there's been in quite some time in terms of the economy, in terms of what the Fed continues to do, in terms of the vaccine news. If you get a stay-at-home order like from a state as large as California, that will take a little bit of enthusiasm, and we may not have a strong December like we've had typically in the past. Yeah. But we don't think it's enough to really cause a major dislocation. It could get as bad as September, October, but down 6.5%, it certainly isn't the end of the world. So much, again, depends upon the fact that the light at the end of the tunnel is so much brighter because of the multiple vaccine candidates, which will finally get some of these bombed out sectors like lodging, airlines, cruise lines, the things that have really been the bottom leg of the K to come back sometime, Q3 of next year.
Troy, it's great to catch up. As always, you're looking well. Yeah. Our best to the team. Troy Gayeski, Skybridge Capital Co. CIO. Good to see you, sir. Pfizer this morning looking for clearance from EU regulators about the rollout now. That's where the focus is now, Lisa, the rollout, the distribution of the vaccine. And it's just amazing. You and I talked about this yesterday, just how well anchored expectations for a better outlook actually are at the moment, that some people would be willing to look through any potential shutdown, lockdown, shelter in place, whatever you would call it, Lisa, in a state as big as California if it comes. Given the fact that we have seen record-performing equity indexes as we see record hospitalizations, a lot of people are looking past the now. De-emphasizing the near term, the hopes for a better 2021. We all share them. Coming up, Lawrence Boone, OECD chief economist, they downgrade their outlook. We'll get that view a little bit later this morning. From New York and London this morning, good morning to you all. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The OECD has cut its global forecast and warns the economy could get worse. The Paris-based organization now expects 4.2% growth next year. That's down from 5% in September. The OECD says that the economy could slow down even more if governments withdraw support too soon or fail to deliver effective vaccines. Fed Chairman Jerome Powell will warn lawmakers that the U.S. economy is still in a damaged and uncertain state. Powell testifies today before the Senate Banking Committee. In prepared remarks, he said that recent news about vaccines is very positive for the medium term. Still, Powell said a resurgence of the coronavirus is concerning. And Pfizer and its partner BioNTech have asked for regulatory clearance for their coronavirus vaccine in Europe. That puts it on track for a potential approval there before the end of the year. A study of almost 44,000 people showed the vaccine prevented 95% of symptomatic coronavirus cases. And OPEC and its allies need more time to reach a deal on oil production policy. A meeting broke down without any agreement, and energy ministers will try again Thursday instead of today. That will allow more time to figure out whether to delay a planned increase in output starting in January. Supporters say the market is too fragile to absorb more oil. And Tesla will be added to the S&P 500 in one shot on December the 21st. That's a move that will ripple through the entire market. Money managers will have to adjust their portfolios to make room for a company worth $538 billion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
desperately believe that we need more stimulus, and we need more stimulus today. I would beg Congress to go back to work and pass a stimulus bill this week. There's no time like the present. Dollars put back in consumers' pockets would be very, very important.
A lot of people share that view. That was Gary Cohn weighing in the last 24 hours. From London and New York this morning, good morning. Alongside Lisa Bravitz, I'm Jonathan Ferro. Tom Keane back in a seat tomorrow. Let's get the price action. This Tuesday morning, what a November we had. Just absolutely unreal. On the S&P 500, you know that big rotation away from the index? The S&P was still up about 11% on the month.